Hello, hello, right. Right. Today I'm going to discuss 2018 company sum. Normally in the ALL paper question number 1 company, we are going to prepare financial statement, general purpose financial statement. Sometimes there's components of financial statement in the ALL paper. If there's components of financial statement, there are 5 things available. First one is statement of profit and loss and other comprehensive income, statement of changes in equity, statement of financial position, statement of cash flow, accounting policies and notes. All the accounting standards and accounting concepts as well as legal requirement we have to apply when preparing financial statement of the company. Therefore, think about concepts, fundamental accounting concept going concern, and matching concepts, prudence concepts, substance or form concepts, money measurement concepts, entity concepts, prudence concepts. Like that, accounting concept we have discussed, materiality, right? And accounting standards, LKS 1, preparation and presentation of financial statement. It has given format for financial statement. And LKS 2, inventory. Think about 5 and back, item by item basis, as well as cost value, net realizable value, stock written off, relevant for LKS 2. And LKS 7, cash flow statement, separate lesson available. LKS 8, accounting policies, changes in account estimates as well as errors. And LKS 10, events after the reporting period. And LKS 16, property, plant and equipment, as well as LKS 37, provision, contingent liability and contingent assets. As well as we have to discuss SLFRS, financial reporting standards. 16 as well as 14. 14, revenue recognized, contract with customers, as well as SLFRS 16, leasing. As well as you have to know EPF and ETF adjustment, that is a legal requirement, EPF and ETF Act, as well as Value Added Tax Act, Income Tax Act, Company Acts. Those are the things we have to apply when preparing financial statement of the company. Right, see this example, this is 2018 A-level paper, question number 1. Right, first one is trial balance. It has given Hiruka PLC engage in retail business and given trial balance as at 31st March 20. Sometime it has given manufacturing and trade in business, but this is a trade in business, retail business. End of the year 31st March 20. Think about time interval concepts, periodicity concepts. We have to provide information annually. Right, first one is the trial balance. Property, plant and equipment, it has given carrying amounts. It means cost minus accumulated depreciation. Not given separately cost value and accumulated depreciation. It has given directly carrying amounts. After deducting accumulated depreciation, it composition available under workings and purchase it has given trade receivable, inventory opening balance. Think about inventory opening. If it has given purchase, definitely as an inventory available in the trial balance, opening balance. And cash equivalents, administrative expense, very important. It has given total value, administrative expense, as well as distribution expense. Think about administration expense, salary, electricity expense, telephone expense, then rent expense, available and building depreciation, office equipment depreciation, available administration expense. It has given trial balance, already recorded, and distribution expense. It is included advertisement expense, warranty expense, discount allowed, motor vehicle depreciation. Trial balance it has given total value. It means those are recorded already. Those values should be included as a balance brought forward under workings. You have to prepare separate working for expenses. Under administration expense as a balance brought forward, this value should be included, as well as distribution cost also as a balance brought forward. Very important this part. Think about administration, distribution. Some expenses have been recorded. Income tax paid, it has not given separately last year, last quarter paid amount, as well as this year first 3 quarter paid amount is not given clearly, but given total paid amounts. You have to recognize under provision, over provision also income tax and trade payable. Sales also given. Provision for warranty opening balance available. Very important. Think about warranty. Normal double entry warranty expense account debit. Provision for warranty account credit. But now it has given opening balance. This is a previous year closing balance. It means previous year already recorded as a warranty 670,000. There were double entry previous year. Warranty expense account debit, provision for warranty account credit. Therefore, that value already considered as expense previous year. And provision for warranty is liability. Previous year closing balance became this year opening balance. Warranty is estimates. Estimate by the business. Therefore, based on LKS 8, if it has given changes in accounting estimates, prospectively should be adjusted. Effect for current and future period, like income tax, like doubtful debts, under provision, over provision should be adjusted. If it has given opening balance in the provision for warranty accounts, opening balance means this is previous year closing balance. It means there were double entry. Warranty expense account debit, provision for warranty account credited last year. Therefore, warranty expense is expense. It had been considered as expense previous year, and provision for warranty is a liability. Previous year closing balance became opening balance this financial year. Therefore, in this example, provision for warranty opening balance is given. This is very important. Right, ordinary sales it has given. Revaluation reserves on land. Think about on land. It means there were revaluation profit before this financial year. Opening balance is given. Therefore, land is a second time revaluation. This is opening balance. Revaluation reserves on land. It means there were revaluation profit on land previous year or before that. And retained earning opening balance also given. Those are should be included as a balance brought forward in the statement of changes in equity. And accrual administration expense available in the trial balance. What is the meaning? Already recorded. Expense account debit, accrual expense account credit. Therefore, there were double entry. This value should be included only current liability. Reason it has given trial balance. If it has given additional information, you have to apply double entry. But now it has given trial balance. It means it has recorded already. Therefore, expense account debited already. Accrual administration expense account credit. Therefore, this value should be included only current liability. But if it has given as adjustment, you have to apply double entry. In this situation, expense account debit, accrual expense account credit. But in this example, it has recorded already. Accrual expense is a liability, should be included under current liability. And provision for income tax opening balance is given. This is the last year, last quarter estimate value for the year end 31st March 19. Therefore, this is a previous year last quarter estimate value. It should be compared with paid amount for that this year first quarter. But it has not given clearly. Total paid amount is given. Therefore, here included previous year last quarter paid amount also. Previous year last quarter income tax should be paid this year first quarter. Therefore, it is available here, but this is the value estimated and considered as expense previous year. It is relevant for under provision, over provision calculation, and given commission income also. That value should be included under other income. In this example, very important thing, think about property, plant, equipment, carrying amount is given. inventory opening balance, provision for warranty also opening balance it has given, and revaluation there were previous surplus available, second time revaluation, and retainer in opening balance is given. And think about income tax, total paid amount is given, it is included this year first quarter paid amount as well as last year last quarter paid amounts. Last year last quarter income tax should be paid this year first quarter, and given provision for income tax last year last quarter, it is relevant for under provision or provision calculation. Right? See the additional information. First one relevant for inventory. You have to apply LKS 2. It has given separately. Inventory item is given separately. Therefore, that adjustment I will discuss separately. Therefore, first one relevant for LKS 2, as well as you have to apply matching concepts as well as prudency concepts. First one. And second adjustment very important. Second one, administrative expense for the current year consists of following item. Trial balance it has given administration expense. Think about total value equals 7,100. It has available trial balance as administration expense. Its composition is given. Salary paid amount is given. Think about cash account credit, salary account debit. Effect for salary account, contribution of employee also. But administration expense included already only paid in cash, salary, net salary. Salary paid, cash account credit, salary account debit. But as a salary, income statement should be included and expense should be included, not net salary, gross salary. Contribution of employee also effect for salary accounts, but it has given as salary only salary paid amounts. Salary paid mean net salary. And employee trust fund also given. There were double entry, ETF expense account debit, ETF payable account credit, recorded already. Direct fees, auditors fees, those are relevant for note number 2. Important expense we have to disclose, and depreciation expense also given. Very important. This is the composition of administration expense. Total value it has given trial balance. Its composition is given here. Therefore, trial balance included those kind of things. Salary paid amount available, ETF expense available, direct fees, auditors fees, and depreciation also available in the trial balance. What is the meaning? Annual depreciation also recorded already. Salary paid amount is given. This one very important. Think how much it being included as salary under administration expense. This is a paid in cash value. Right. Third one relevant for EPF and ETF adjustment. I will discuss separately. First one, try to get idea. And third one relevant for EPF and ETF adjustment. Third one. And fourth one, given composition of property, plant and equipment, land. Try to recognize opening or closing balance. It has given composition of property, plant and equipment, and their accumulated depreciation as at 31st March 20. End of the year. It has given end of the year, but some balances it has given opening balance. How to decide? See the related transaction. Accumulated depreciation, sometime it has given opening balance, sometime it has given closing balance. How to decide it? For accumulated depreciation, there are two adjustment effects. First one, annual depreciation. Second one, accumulated depreciation of disposal asset. If those are recorded as accumulated depreciation, here available closing balance. You have to decide opening or closing balance. How to decide? Think about accumulated depreciation. For accumulated depreciation, there are two adjustment effects. First one, annual depreciation. Second one, accumulated depreciation of disposal asset. If those are recorded as accumulated depreciation, here it has given closing balance. If those are recorded, that is the way you have decided. If those are not recorded, opening balance. And cost and reversion amounts. How to decide opening or closing balance? See the related adjustment. Sometimes it has given purchase, sometimes it has given disposal, sometimes it has given revaluation, sometimes it has given exchange. If those are recorded, closing balance. If those are not recorded, opening balance. That is a way we have to decide opening or closing. මෙතන balance එක 31st March 20 කියලා දුන්නට හැම balance එකක්ම closing නෙවෙයි. Therefore, you have to decide opening or closing based on given information. And given depreciation rate also. Depreciation rate. Land is a non-depreciable asset. Reason lifetime unlimited. But building 5%, motor vehicle 20%, office equipment 10%. Property, plant and equipment very important. Right. Then think about next one. Try to decide opening or closing balance based on given information. මේ අපිට කෙලින්ම balance brought forward කියලා opening balance කියලා එහෙම දාගන්න බෑ. Based on given information, you have to decide given information opening or closing. Right, think about next one. While motor vehicle are used for distribution of goods, all other property, plant and equipment items are used for administration purpose. Think about motor vehicle used for distribution of goods. It means motor vehicle depreciation should be included in distribution cost. All other property, plant and equipment items are used for administration purpose. Therefore, all other property, plant and equipment depreciation should be included under administration expense. And all depreciable assets are depreciated using straight line methods. All the depreciable assets are depreciated using straight line methods, and depreciation for the current year has been recorded properly. Has been provided. Very important. Depreciation for the current year has been provided. It means annual depreciation was recorded. Therefore, think about accumulated depreciation. Annual depreciation recorded. And think about disposal also. For accumulated depreciation, there are two adjustment effects. Not only annual depreciation. If it has given disposal, it accumulated depreciation also effect for accumulated depreciation accounts. Annual depreciation recorded. Normally closing. But if it has given disposal, you have to consider disposal asset accumulated depreciation also. Right. Think about depreciation for the current year has been provided. Think about here administration expense. It composition available. It has given depreciation expense recorded already. Available in the trial balance. This is a composition of administration expense. Under administration expense as a depreciation, you have to include building depreciation as well as office equipment depreciation. Available in the trial balance. This is the composition of administration expense. Its total value is given trial balance. Therefore, trial balance includes depreciation expense also. But the meaning annual depreciation was recorded. Therefore, normally accumulated depreciation closing balance. But if it has given disposal, it accumulated depreciation also you have to consider. Right. Next one, think about land of the business was revalued first time on 31st March 17. Before 2 years, revalued 25,500. Now it has available here. If it has revalue, not available cost value. This is a previous year revaluation amounts. This is a before 2 years revalue. That value available here as opening balance. Second time revaluation and trial balance it has given land revaluation reserves also 5,000. Think about second time revaluation. Then read further. It has given the land was revalued on 31st March 20 for 19,500 for the second time, and it has not yet been accounted. Think about it. Revaluation relevant for land during the accounting period not recorded. Therefore, land account balance available, opening balance. This value should be included as opening balance. Reason, this year revaluation was not recorded yet. This is second time revaluation. Revaluation relevant for land not recorded. Therefore, land opening balance. You have to decide given information opening or closing. මෙතන 31st March 20 දුන්නයි කියලා මෙතන තියෙන සියලුම balance closing balance එහෙම නෙවෙයි. See the related adjustment. Relevant for land revaluation. Think about this one. Second time revaluation. Before 2 years, it has already revalued. It is available here. And but this year revaluation was not recorded. We are going to provide information for the year end 31st March 20. Therefore, land relevant for revaluation not recorded. Therefore, this balance is an opening balance. Right, next one. Construction of new building costing 4 million was completed on 31st March 20. New building constructed. It has completed end of the year, and adjustment related to new building has been properly accounted. Think about it. Relevant for building construction. Construction means like a purchase. Alut building එක හදලා බලන්න. Effect for building increase. Cash account credit, building account debit. Like a building purchase. But construction was completed end of the year. Therefore, this asset not available during the accounting period, but constructed completed end of the year. And adjustment related to new building has been properly accounted. It means cash account credit, building account debited. Therefore, here as a building available, closing balance. Closing, not opening. But think about land, opening balance. Think how to decide. Relevant for building construction, completed, recorded properly. Cash account credit, building account debited. Therefore, this is not opening balance. This is a closing balance. Next one. Very important. Think about 8. First one, try to get idea. This is 2018 A-level paper. And motor vehicle costing 2.5 million was disposed for 1.5 million end of the year. This motor vehicle was purchased on 1st October 2018. This disposal has properly accounted, and loss on disposal of motor vehicle has been recorded under distribution cost. Think about disposal adjustment has been recorded. It means cost value deducted from cost value. Accumulated depreciation deducted from accumulated depreciation. Disposal value recorded. Profit and loss also calculated, but loss erroneously recorded under distribution cost. If there is a loss, should be included under other expense, but erroneously disposal loss recorded under distribution cost. But it has given this disposal has been properly accounted. Think about if it has given disposal, it cost value, it accumulated depreciation, annual depreciation, disposal profit and loss, disposal value, 5 steps. Recorded properly, but disposal loss erroneously included under distribution cost. Disposal loss should be included under other expense, but erroneously it has recorded under distribution cost. Right, now think about disposal recorded properly, annual depreciation also recorded. Therefore, think about motor vehicle. This is a closing balance. And accumulated depreciation also closing balance. Reason, annual depreciation recorded and accumulated depreciation of disposal asset also recorded. Normally accumulated depreciation effect, there are two adjustments. Annual depreciation as well as if it has given disposal, it accumulated depreciation. In this example, both annual depreciation recorded and disposal adjustment also recorded. Therefore, accumulated depreciation closing balance. And building, relevant for building construction, recorded closing balance. Motor vehicle relevant for disposal, recorded closing balance. But land relevant for revaluation, not recorded. Land, it has given opening balance. All other things it has given closing balance. And office equipment, no adjustment effect. Therefore, office equipment opening balance as well as closing balance, both are equal. Therefore, this value should be considered as opening balance as well as closing balance. But annual depreciation recorded, therefore accumulated depreciation closing balance. Think about how many adjustment effect for property plant equipment. First, this one and this one, this one. There are 6 adjustment. In the company sum, it has given there are 12 adjustment. Out of 12, 6 adjustment relevant for property, plant and equipment. Not given clearly opening or closing balance. Second time revaluation available. Building relevant for construction. And motor vehicle relevant for disposal. Rate is given. Depreciation recorded already. Second time revaluation. Very important. Right, next one. Additional 9th one, think about. There were no other addition or disposal of property plant equipment during the year. No other addition. Right. 10th one, relevant for warranty. Trial balance is given. Provision for warranty count, opening balance also. As well as 11th one, relevant for bank loan. Bank loan. Also like a leasing. Loan should be included separately under current liability as well as non-current liability. Loan also we have to settle. Next year settle amount should be included under current liability and balance part should be included under non-current liability. Therefore, try to recognize bank loan how to disclose on the financial statement. දැන් බලන්න මීට කලින් හදපු ගණන් වල bank loan අපි කෙලින්ම non-current liability දැම්මට එහෙම හැමදාම කරන්න බෑ. Recent loan we have to settle from next year. Loan should be, think about loan obtained, then we have to pay installment. Therefore, next year also we have to settle. Therefore, bank loan also like leasing should be recognized separately current liability as well as non-current liability. Additional 11th one, very important, relevant for bank loan. Try to recognize how to separate current liability and non-current liability bank loan. As well as 12th one, relevant for income tax adjustment. Trial balance it has given income tax paid amount, total value, not given separately, previous last quarter paid amount, and this year first quarter paid amount is not given separately, but given total value. And provision for income tax also given. Provision for income tax opening balance is given. It is relevant for under provision or provision calculation. Right, there are 12 adjustment available. There are 6 adjustment relevant for property plant equipment. And given administration distribution expense, trial balance it has given total value. Those are should be included as a balance brought forward under workings. And inventory as well as EPF adjustment available. Property plant equipment, there are 4 items. Right, first one, prepare the requirements. They asked to the following financial statement, including notes, Hiruka PLC for publication purpose. Publication. As per LCS 1, preparation and presentation of financial statement. First one, they ask statement of profit and loss and other comprehensive income for the year end 31st March 20. Statement of changes in equity. Statement of financial position. Right, first one, draw the format. Notes also, including notes. Right, this is a format for income statement. Name 3 line. Think about. This is format. Income statement. Normally notes For other income, profit before tax, income tax. Notes should be prepared for that. And other comprehensive income, normally other comprehensive income should be recorded revaluation profit, but sometime if it has given second time revaluation, sometime revaluation loss also we have to record if it has given second time revaluation. But normally revaluation surplus should be included under other comprehensive income. And this is a format for statement of change in equity. Think about ordinary shares, revaluation reserves, retained earning, and general reserves, normal format. Right, all the share issue, right issue, bonus issue. In this example, not given share issue. And in this example, it has not given interim dividends also. Opening balance is given, right? Changes in equity, this is the format. Then think about financial position, non-current name, 2 line, name of the business, statement of financial position as at 31st March 20, 2 columns, non-current assets, property, plant, equipment, right of use of lease asset. If it has given leasing, but in this example, it has not given leasing. 2018 paper, it has not given leasing adjustment in the company sum, but it was available MCQ paper. Leasing definitely they asked, but 2018 company sum, it has not available. Therefore, no need to prepare separate note for that. But normally in the company sum, note number 5, relevant for right of use of lease asset. Then fixed deposit, investment, inventory, trade receivable, right? This is the current assets, and this is equity. And non-current liability, lease creditor, if it has given debentures, if it has given bank loans, should be included here. If they are should be recorded. And bank loan also should be recognized separately, like a leasing. Very important. Try to recognize how to disclose bank loan under current liability as well as non-current liability. And income tax payable as well as other liabilities. Accrual expense and other current liabilities, separate note. Note number 1, other income. All other income should be included here. Note number 2, important expense should be disclosed for decision making. Following expenses are deducted before calculating profit before tax. The next one, income tax adjustment. Income tax adjustment. And property, plant, equipment. It has given land, building not available here. So building available, motor vehicle and office equipment. This is a format for property, plant, equipment. Opening balance. Think about cost and accumulated depreciation. Here you have to disclose composition of cost value. Opening balance. Purchase. It has given construction also. Construction also should be recorded under purchase. Like purchase. Disposal, revaluation and depreciation adjustment for revaluation. Think about accumulated depreciation format. And if it has given lease in separate note, but in this example, no need to prepare these notes. Trade receivable, if it has given trade receivable minus allowances for expected losses. If it has given provision for doubtful debt, should be disclosed here. And prepaid expense and other current assets, those are the normal notes. මේ තමයි සාමාන්‍යයෙන් එන ටික. මේ හැම එකක්ම අපිට ගානේ හදන්න වෙන්නේ නැහැ. ගාන තියෙන කරුණනෝ අපි ඩිසයිඩ් කරන්න ඕන. මේ තමයි සාමාන්‍යයෙන් එන ටික. Then note number 8, cash and cash equivalents. If it has given 3-month treasury bill, if it has given cash balance, if it has given short-term investment, sometimes it has given fixed deposit for 3-month period. Part of cash and cash equivalents. Fixed deposit, it has given sometime for 3-month period. Those are cannot be included under non-current assets. Part of cash and cash equivalents. Those are called short-term investment. Right. Next one, accrual expense and other current liability. Accrual expense and other current liability. Right. Then under expense, under work in, you have to prepare work in for cost of sales calculation. Opening inventory plus purchase minus closing inventory. If it has given purchase return, if it has given damage stock, import duty, carriage inwards, also part of cost of sales calculation. Under work in, You have to prepare separate working for cost of sales calculation. And expense also, you have to prepare separate workings. Expenses, administration, distribution, other, finance. If it has given balances in the trial balance, those values should be included as a balance brought forward. Those are the format. First one, income statement. Second one, change in equity. Third one is statement of financial position. Then fourth one, notes. Notes. Then under work in cost of sales calculation as well as expenses. Right. From the beginning, take the balances if it has given. It has given balances, changes in equity, ordinary shares, revaluation reserves, general reserves, retained earning. If it has given balances, take as brought forward. See the trial balance. From the beginning, take the balances if it has given. It has given ordinary shares 35,000 and revaluation reserves on land 5,000, as well as given retained earning. If those are considered, tick mark. Take the balances as brought forward in the statement of change in equity. Statement of change in equity as a balance brought forward 1st April 2019. Ordinary shares 35,000. Revaluation reserves 5,000. General reserves not available, but given retained earning 6,880. 6,880. And take the total value last column. Therefore, total value equal 46,880. Opening balance. As well as it has given trial balance, administration and distribution expense. Think about administration expense as well as distribution expense. Given trial balance, those values should be included as a balance brought forward under working. Those are recorded already, therefore should be included as a balance brought forward under workings. Right, record administration expense, distribution expense under working as a balance brought forward. Under expense as a balance brought forward. Administration 7,100 here balance. Balance. Those are recorded already, available trial balance. Administration value equal 7,100 and distribution value equal 9,850. Distribution cost equal 9,850 and administration value equal 7,100. Those are available in the trial balance. It means there were double entry recorded already. Those values should be included as a balance brought forward. Right. Now think about adjustment. First one, think about additional first fund 11 for inventory. There are 3 marks available. Think about LKS2, matching concepts as well as prudency concepts. Based on matching concepts, under cost of sales calculation, as a closing inventory should be included cost value. Based on prudency concept, lower value of cost and net realizable value should be included under current assets. Based on LKS2, when calculating low amount of cost and NRV, 2 methods can be applied. First one, item by item basis. Second one, group basis. Therefore, first one, they check matching concepts, prudence concepts, as well as LKS2. Right, inventory consists of 3 categories and their cost and net realizable value is given. Group is given category and given milk, rice, sugar. Those are the category. Group. Sometimes it is given rice separately, kakulu, basmati, samba like that. Rice it is given Milk powder it has given, Anchor, Last Spray, like that. Separately, sometimes it has given. Those are items. But here it is given category. Milk powder, rice, sugar. Sometimes it has given it composition also. Right, cost value and net realizable value is given. This is cost value. Therefore, you have to recognize separate. This is a group. Total value cannot be considered. Item by item basis, a grouping method should be applied based on error case 2. Therefore, it has given group. Therefore, group, think about low value. Right, prepare separate working for that. This is the way you have to calculate. There are 3 marks available. Workings. Think about grouping method and item by item basis. It has given category mean group, not item. Then cost value is given, net realizable value is given. You have to calculate low amounts. Therefore, here low amount should be calculated. Low value. Here you have to calculate low amounts. Low amount should be calculated. Therefore, here low amounts. Think about total value cannot be considered. Total value. This is a group. Then take low value milk 4,200 and NRV 4,400. Therefore, here low amount equal 4,200. Low value. And rice cost value equal 2,500. NRV equal 2,100. Therefore, low amount equal 2,100. Low amounts. And sugar cost value equal 3,800, but net realizable value 3,900. Low amount equal 3,800. Therefore, here 3,800. Then take the low value, it total amounts. Low value, it total amounts 4,200 plus 2,100 plus 3,800. Therefore, low amounts, it total value equal 10,100. This is the cost value based on matching concepts. Based on matching concepts. And this is the low amounts, it total value. Low amount, it total value. Therefore, based on matching concepts, this is the value should be considered as a closing inventory under cost of sales calculation. But under current assets, this is the value should be included as a closing inventory. Under current assets, this one under cost of sales calculation, and difference value under stock written off. This is value should be included financial position. Therefore, think about stock written off. Stock written off value equal. Therefore, stock written off, and think about this value where we have to include low amount, it total value should be included financial position, as well as cost value, it total amount should be included under cost of sales calculation. Right. Then here, this value should be included under cost of sales calculation. Under cost of sales calculation. Under cost of sales calculation, cost value should be included. And low amount should be included, it total value under current assets. Under current assets. Under current assets. As well as stock written off difference value. Stock written off. If NRV lower than the cost value. Therefore, now stock written off should be recognized lower value, it total amount, and compare with cost value. Stock written off. Stock written off. There are 3 marks available. 3 marks. That this is value should be included under cost of sales calculation. This value should be included under cost of sales calculation based on matching concepts, based on prudency concepts, and current assets, low amounts, it total value, as well as difference value. Think about difference value. Compare with cost value and net realizable value. Therefore, those two values should be compared. Cost value as well as net realizable value. Therefore, here difference value equal 400. That is value should be included under cost of sales calculation. And other expense as stock written off. Therefore, there are 4 marks, 3 marks available. Think about under cost of sales calculation, as well as think about under other expense as a stock written off, as well as under current assets. Under current assets, think about how much should be included. Under current assets low value equal 10,100. There are 3 marks available. Think how to calculate low value. Item by item basis as well as group basis should be applied. Based on matching concepts, cost value under cost of sales calculation. Based on prudency concepts, asset and income should not be overstated. Based on prudency concepts, lower value, it total amount should be included under current assets. And difference value should be considered as a stock written off. That value should be included under other expense, stock written off. Under cost of sales calculation, value equal 10,500. Right now, records on the financial statement, there are 3 marks available. Additional information. Right. This one cost of sales calculation, this one other expense, this one under current assets. Records financial position under current assets as inventory here. Lower value, it total amount equal 10,100. Then under cost of sales calculation, Perkins as a closing inventory here, within brackets cost value 10,500. As well as under expense, stock written off, and expense as stock written off, and other expense 400. Description is stock written off. Is stock written off. Expense should be included under other expense. There are 3 marks available. Adjustment number 1. Let's see the second adjustment. Very, very important. Read carefully. Try to get idea. Think about second one. First one, read and get idea. Administration expense for the current year consists of following item. Total value equal 7,100. It has available in the trial balance. First one is the trial balance. It has given administration expense. Its composition is given. Think about salary paid. As a salary, under administration expense should be included gross salary. EPF contribution of employee also effect for salary, but only salary paid in cash value included under administration expense. Therefore, there is adjustment available here. Think about how much should be adjusted. Already under administration expense includes 2,700. But think about how much should be included. And employee trust fund. What is the meaning? ETF expense account debit, ETF payable account credit. They were double entry. Recorded already. Available administration expense. But it has not given ETF payable account. If it has available under expense, it means ETF recorded. What is the double entry? ETF expense account debit, ETF payable account credit. But it has not given trial balance ETF payable account. Why? That value already transferred to the central bank. Itana double entry dekak kena balan. First one, ETF expense account debit, ETF payable account credit. First one. After that, that value should be transferred to the central bank. In this situation, cash account credit, ETF payable account debit. Payable එක නැති වෙලා යනවා බලන්න. ඒක central bank එකට යවපුවම තව entry එකක් එනවා. Cash account credit, ETF payable account debit. Therefore, in the trial balance, it has not given ETF payable account, but ETF expense account available. It means ETF recorded already, but why it has not given ETF payable? That value already transferred to the central bank. හැම වෙලාවෙම ETF payable එකේ balance එකක් එන්නේ නැහැ. දැන් ගොඩක් ළමයි ඔය EPF adjustment එක කරන්නේ ledger accounts හදන්නේ නැහැ. ඒගොල්ලෝ calculate කරනවා අර contribution of employee and contribution of employee හොයලා දෙකේ total එක කෙලින්ම දානවා EPF payable වල. That is not correct. Sometimes EPF payable account balance not available. Reason that value should be transferred to the central bank. If it has paid in cash to the central bank, cash account credit, EPF payable account debit. එතකොට payable එකේ balance එක නැති වෙලා යනවා. දැන් ළමයි හිතනවා EPF payable එකට හැම වෙලාවෙම එන්නේ contribution of employee and contribution of employer කියන දෙකේ total එක කියලා. අන්න ඒක වැරදි. EPF payable එකේ balance එකක් එන්නත් පුළුවන්, නැති වෙන්නත් පුළුවන්, වැඩි වෙන්නත් පුළුවන්, අඩු වෙන්නත් පුළුවන්. It is depend on paid in cash to the central bank. සමහරට ගිය පාරේ වගේ වල නැති වෙන්නත් පුළුවන්. Therefore, you have to prepare ledger accounts. Think about ETF expense available under administration expense. What's the meaning? ETF contribution of employer recorded. Think about double entry. ETF expense account debit, ETF payable account credit. Expense available but not available payable. What is the meaning? That value already paid in cash to the central bank. Central bank එකටත් යවලා. ETF expense account debit, ETF payable account credit. ඒක යවුවොත් එම cash account credit, ETF payable account debit. ඒතර payable එකේ balance එකක් එන්නේ නැහැ. Right, important thing, ETF recorded already, but salary it has given paid in cash. Cash account credit, salary account debit. Think about EPF contribution of employee, salary account debit, EPF payable account credit. Therefore, contribution of employee for EPF also effect for salary accounts, but under administration expense as a salary it has given only paid in cash. But when we are going to prepare financial statement, under administration expense as a salary should be included gross salary. This is a net salary. And direct fees, auditor's fees, it has given separately. Why it has given? Those should be disclosed under note number 2. And given depreciation expense also, it means annual depreciation already recorded. Building depreciation and office equipment depreciation should be included under administration expense. Those are recorded already. Now think about at the same time additional 3. Additional 2 and additional 3 should be done together. Already opening balance included, this balance included under expense. Therefore, those are already recorded under administration expense. Now think about third one, relevant for EPF, this adjustment. Read carefully third one. It has given salaries included in the administration expense represent the net salary paid to the company, paid to the employees. Think about salary included in the administration expense represent the net salary paid to the employee. But think about under administration expense, as salary should be included, not net salary, gross salary should be included. Contribution of employee also effect for salary, but it has not recorded. It has given net salary has been calculated after deducting employee contribution to EPF. Think about how to calculate net salary. Then it has given the employer and employee contribution is given 15% and 5% for EPF respectively. However, both employer and employee contribution to EPF for the current year has not been paid to the central bank and also not recorded in the books of accounts. Think about there are two parts, not recorded as well as not paid in cash to the central bank. EPF, both you have to consider employee contribution. Employee contribution effect for salary. If it has recorded, salary account debit, EPF payable account credit, but contribution of employee not recorded, therefore net salary available. And contribution of employer also not recorded, and those are not paid in cash to the central bank. Not paid in cash. Therefore, EPF, think about contribution of employer and contribution of employee. Right, prepare the working for that. Think about EPF and ETF. Additional 2 and 3, think about additional 2 and 3 workings. Additional 2 and 3. Second one as well as third one. Related workings. That this is additional second one. Additional second one. And additional third one also should be done together. This is additional second one. And additional third one. Think about EPF and ETF, very important. Right, first one, it has given under administration expense as salary, net salary. This is a net salary. ETF recorded already. Then think about EPF. EPF contribution of employer and employee. Percentage is given. First one, think about EPF and ETF. EPF recorded already. And percentage it has given 10% and 15%. Employer and employee. And here net salary available. Therefore, from the beginning, gross salary should be calculated. Think about gross salary, how to calculate. When we are going to calculate net salary, from gross salary, deduct EPF contribution of employee. Therefore, this is the way normally we have to calculate. Gross salary minus EPF employee equal net salary. This is the normal way. That gross salary, it has given under administration expense as a salary paid 2,700. Therefore, this is a net salary. Therefore, net salary equal gross salary minus EPF contribution of employee. Net salary is given. If gross salary 100, deducted EPF contribution of employee, EPF contribution of employee equal 10%. Therefore, from gross salary deduct 10%. Therefore, net salary equal 90. This is a basic part. 10% deducted when calculating net salary. If gross salary 100, deducted employee contribution, therefore net salary equal 90. But in this example, it has given net salary 2,700. Paid in cash, cash account credit, salary account debit. Therefore, this is the way you have to calculate gross salary. First one, you have to calculate gross salary. Gross salary equal 2,700 divided by 90 into 100. Therefore, divided by 90 into 100. Therefore, this is the gross salary. Therefore, this one divided by 90 into 100, gross salary equal 3,000. Therefore, this is value should be considered as a salary, but already paid amount included under administration expense. Therefore, gross salary equal 3,000. Then calculate contribution of employee and employer based on gross salary. Therefore, 3,000 into 10%. 3,000 into 10%. Therefore, contribution of employee equal 300 and contribution of employer 15%. Therefore, 15% equal 450. When calculating net salary from gross salary, deduct EPF contribution of employee equal 300. Therefore, deduct 300 equal, think about net salary. Therefore, this is the way you have to calculate net salary. Right now, think how to record in the ledger account also. This is a net salary. From gross salary, deduct EPF contribution of employee. Think how to calculate gross salary. Then, as a ledger account, salary available under administration expense paid in cash. Cash account credit, salary account debited. That value should be included as a balance brought forward now. Right, prepare the ledger account also. Salary accounts, EPF payable as well as EPF expense. ETF recorded already. Therefore, no need to prepare ledger account for ETF. There are 3 ledger accounts. Salary accounts, EPF payable as well as EPF expense. First one, take the balances salary accounts. As a balance, you have to consider paid in cash 2,700. Cash account credit, salary account debited already. Therefore, no need to prepare cash account. That value recorded already. Therefore, 2,700, this value should be included as a balance brought forward. 2,700 as a balance brought forward. That is a net salary already recorded. Cash account credit, salary account debited. It has available under administration expense. Therefore, here cannot be written as a cash. Now think about contribution of employee and employer. Here it is given both employer and employee contribution for EPF and ETF has not been paid to the central bank and also not recorded. Not recorded. Think how it records. Contribution of employee, salary account debit, EPF payable account credit. This value also part of salary. That value should be deducted from salary and it should be transferred to the central bank. Therefore, 300,000 salary account debit, EPF payable account credit. That is a contribution of employee as a salary, EPF payable account credit as a salary, and salary account debit as a EPF payable. This is a contribution of employee. Then contribution of employer, value equal 450. That value cannot be deducted from salary. It is not part of salary. It is another expense. Therefore, this one EPF expense account debit, EPF payable account credit. It is not effect for salary. Therefore, 450 EPF expense account debit, EPF payable account credit. Therefore, EPF payable account credit as a EPF expense, EPF expense account debit as a EPF payable. Now think about this is a value should be paid to the central bank. If it has paid in cash to the central bank, cash account credit, EPF payable account debit. But in this example, it has given both employer and employee contribution for EPF for the current year has not been paid to the central bank. If it has paid in cash to the central bank, other double entry cash account credit, EPF payable account debit. එතකොට payable එකේ අනිවාර්යම balance එකක් එනවා කියලා අපි කියන්නේ නැහැ. මේක central bank එකට මේ මාසේ මේ අවුරුද්දේ මේ යවුවොත් එහෙම තව double entry එකක් යනවා මෙතන. Cash account credit, EPF payable account debit. එහෙනම් EPF payable එකේ balance එක අපිට හරියට එහෙම කියන්න බෑ නිකන්. මේකේ opening balance එකක් තියෙන්න පුළුවන්. It is depend on paid or not to the central bank. But in this example, not paid. Right now, think how it records. Think about salary. Already, think about salary account balance equal. First one, this one close. Salary account balance equal 300. Close salary accounts. Debit side increase 3000 and take credit side 3000. Difference value as income statement. Income statement. This is a value should be included under administration expense. But already paid amount included. This is a correct value. This value included under administration expense. Therefore, think how much should be recorded. And EPF payable liability, credit side increase, balance carried down 750. Take the debit side and difference value as balance carried down and balance brought forward 750. That is a closing balance under current liability. Those are not paid in cash to the central bank. Therefore, we have to pay liability. And EPF expense under administration expense. Debit side increase, take the credit side, difference value as an income statement. As income statement. Now think how records, very important. Think about salary, already paid in cash, this value included. But as a salary should be included under administration expense 3000. Therefore, now only 300 should be recorded. Reason, already paid amount included under administration expense. Think about administration expense here. It has given composition of administration expense. Therefore, it has available salary paid amounts. Therefore, now 3000 cannot be recorded. 2700 included. Therefore, only 300 should be included under administration expense. මෙතන මේ balance එක ඇතුළේ තියෙනවා ගෙවලා තියෙන ගාන. Correct value equal 3000, but already included paid amount 2700. Therefore, as a salary under administration expense should be included only 300, not 3000 now. Reason 2700 included under administration expense. And EPF payable current liability, EPF expense under administration expense. Right, records as a salary only 300, not 3000. Reason already paid amount included under administration expense. Therefore, as a salary 300 and EPF payable current liability 750, EPF expense under administration expense. Right, record. Note number 9, actual expense and other current liability as a EPF expense, as a EPF payable 750. EPF payable current liability 750. But under expense as a salary, already paid amount included under administration, therefore only 300. And as a EPF expense, EPF expense only 450. ETF expense, it has given opening balance. Therefore, no need to record separately. ETF expense already included under administration expense. Therefore, no need to record again. Opening balance included that part. Right, I just remember second one also correct. Think about as a salary. Here 3000 cannot be included. Correct value equal 3000, but already paid in cash 2700 included already. Therefore, as a salary should be included only 300. Right, think about second one. Second adjustment salary, okay. EPF, ETF opening balance included. And direct fees, auditor's fees, those are given separately. Reason, those values should be disclosed under note number 2. That part I will discuss later. And depreciation expense it has given. It means annual depreciation recorded already. It is relevant for property, plant and equipment. This part I will discuss with property, plant and equipment. This is 2018 paper. Right, adjustment number 1, 2, 3, okay. Think about from fourth one. Very, very important. Relevant for property, plant and equipment. Right. Think about fourth one. Given composition of property, plant and equipment and their accumulated depreciation as at 31st March 20 was as follow. Given closing balances, but all the balances are not closing. මෙතන 31st March 20 කියලා දුන්නට මෙතන තියෙන balance opening balance වෙන්නත් පුළුවන්, closing වෙන්නත් පුළුවන්. How to decide? For accumulated depreciation, two adjustment effect, annual depreciation as well as accumulated depreciation of disposal asset. If those are recorded, closing balance. If those are not recorded, opening balance. It means annual depreciation, and if it has given disposal adjustment, it accumulated depreciation, recorded closing balance. If those are not recorded, opening balance. And land relevant for revaluation, not recorded. Therefore, land opening balance. Building relevant for construction. Construction, it has given additional 7th one. Recorded. Relevant for building construction, it has recorded. Therefore, building closing balance. Motor vehicle relevant for disposal, it has given additional 8 one. Also recorded properly. Therefore, closing balance. But office equipment, no adjustment effect. First one, think about cost value. Relevant for land revaluation, not recorded. Therefore, opening balance. Building and motor vehicle, closing balance. Office equipment, opening both closing balance equal. Opening and closing balance both are equal. And accumulated depreciation, closing balance. Reason, annual depreciation has been recorded. As well as disposal adjustment also recorded. That first one, think about land. Additional 6.11. ගාන හදන ගමන් balance ටික අපි දාගමු. Right, relevant for land revaluation. Additional 5 also read and get idea. While motor vehicle are used for distribution of goods, all other property plant equipment item are used for administration purpose. All depreciable assets are depreciated using straight line method, and depreciation for the current year has been provided. Annual depreciation already recorded. Right, now think about 6 one. Relevant for land revaluation. Try to calculate profit and loss. Second time revaluation. Land of the business was revalued for the first time on 31st March 17. It is not relevant for this financial year. Before 2 years and given for 25,500. That value available here. This is the first time revaluation amounts. This is not cost value. And think about balance part. Land was revalued on 31st March 20 for 19,500 for the second time. It has not yet been recorded. That is the thing you have to consider. Our accounting period end of the year 31st March 20. Second time revaluation not recorded. Therefore, land as a land here available opening balance. This is the first time revaluation amounts. This is not cost value. Therefore, now you have to compare with the first time revaluation amounts and second time revaluation amounts, not cost value. And trial balance it has given revaluation reserves account balance also available. Revaluation reserves account balance it has given. It has given revaluation reserves on land 19,500. Reserves account balance sheet has given 5,000. There were first time revaluation surplus. Right now, think about this year profit and loss. You have to compare with previous year revaluation amounts and this year revaluation amounts. Prepare the working for that. Revaluation, adjustment number 6. Adjustment number 6, relevant for revaluation. Land of the business was revalued for the first time. It has given first time revaluation amounts and second time revaluation during the current period. Therefore, you have to compare with first time revaluation amounts and second time revaluation amounts. Think about this year revaluation amount lower than the first time revaluation amounts. Therefore, this year revaluation loss. This year revaluation loss. This year revaluation amount lower than the first time revaluation amounts. Therefore, revaluation loss, think about 25,500. That is the first time revaluation amounts minus this year revaluation amount equal 19,500. Therefore, this year revaluation amount lower than the first time revaluation amounts. Therefore, loss equal 6,000. Now think how to record this year loss. It has given the trial balance. There were first time profit also. You try to recognize how to record this year loss. It has given trial balance. Revaluation reserves on land. Balance available 5,000. This is the first time revaluation surplus. But this year loss equal 6,000. Therefore, when recording this year loss, normally loss should be recorded under other expense. Normally loss, but there were first time profit available. Therefore, this is the way you have records. Think about which account debit, which account credit. Think about double entry, which account debit, which account credit. Think about. Think about debit and credit. Revaluation loss. Therefore, effect for land decrease, credit. Land account credit. Effect for land decrease, land account credit. But think about which account debit. Which account debit? First time revaluation surplus also available. There are 3 marks available. Therefore, debit. Normally, loss should be debit income statement, profit and loss accounts. Income statement debit normally. But there were previous year surplus available. Therefore, amount equal for previous year surplus should be debit revaluation reserves accounts. Revaluation reserves accounts. Now think about which account debit. Trial balance has given first time revaluation reserves available 5,000. That value should be debit revaluation reserves accounts. Land account should be credit total value 6,000. Land account credit 6,000. But normally loss should be recorded income statement. Profit and loss account should be debit normally. But there were previous year surplus available. Therefore, amount equal for previous year surplus should be debit revaluation reserves account. Balance part should be debit income statement. Therefore, think about where we have records. This year loss equal 6,000. Therefore, this is the value should be included under other expense. Under other expense. Under other expense should be included only 1,000, not 6,000. This is not first time revaluation, second time revaluation. And there were revaluation surplus available. When recording this year loss, amount equal for previous year surplus, debit revaluation reserves accounts. That value should be included under other comprehensive income. And under other comprehensive income, how it records? within brackets. Amount equal for previous surplus. We are going to record this year loss. Therefore, when we are going to record this year loss, amount equal for previous profit should be included under other company's income within brackets. And balance part should be included under other expense as expense and total loss land account credit. Therefore, there are 3 marks available. If there's double entry, land account credit 6,000. If there's double entry, land account credit 6,000. And revaluation reserves account debit 5,000. And income statement debit 1,000. If there's double entry. When we are going to record in the company sum, total loss should be included PP schedule. This one PPE schedule. And this one under other company's income within brackets. And this one should be included under other expense as a land revaluation loss. Right, record there are 3 marks available. Second time revaluation, it has not recorded yet. Therefore, first one try to complete PP schedule. Relevant for land revaluation, not recorded. Therefore, given balance is opening balance. Think what it has given land. This is opening balance. Reason relevant for land revaluation not recorded yet. Therefore, 25,500 not closing, but given here 31st March 20. Think what? Although it has given 31st March 20, all the balances are not closing. See the related adjustment. If it has not recorded, opening. Land relevant for revaluation. It has given here clearly. Land was revalued 31st March 20 for 19,500 for the second time, and it has not yet been accounted. Therefore, relevant for land revaluation, it has not recorded yet. Therefore, this is the opening balance. That value should be included PP schedule. Land 25,500. Opening balance. And revaluation loss equal 6,000 minus. Total loss. මෙතන බෙදලා දාන්න බෑ. බෙදලා යන income statement එකටයි other expense වලටයි. Right, total loss equal 6,000. If it has correctly recorded, closing balance will be equal revaluation amounts based on relevancy qualitative characteristics. And land is a non-depreciable asset. Reason lifetime unlimited. Therefore, accumulated depreciation, opening, closing, both value 0. Net book value also should be equal revaluation amounts. This is the way you have to record PP schedule. And amount equal for previous surplus. When we are going to record this year loss, amount equal for previous surplus should be included under other comprehensive income like this as a land revaluation loss. As land revaluation loss. This is the way you have records within brackets. We are going to record this year loss, but there were previous profit. Therefore, when recording this year loss, amount equal for previous profit should be included under other comprehensive income within brackets. And other comprehensive income within brackets. And balance part should be included under other expense. Think about total loss equal 6,000. Balance part should be included under other expense as a land revaluation loss. As a land revaluation loss, value should be included under other expense only 1,000. Land revaluation loss equal 1,000. Second time revaluation. Right. Therefore, revaluation part okay. We have been discussing property, plant and equipment schedule. Land okay. Now think about building. There are 6 adjustment relevant for property, plant and equipment. There are 6 adjustment relevant for property, plant and equipment. Therefore, land already we have discussed. Think about building. It has given building 28,000. Transaction number 7th one relevant for building. See the transaction number 71, relevant for building. Read carefully 71, this adjustment. Adjustment number 71, read carefully. Relevant for building. Construction. It has given building construction. Think about date also very important. Date also very important. Think about construction recorded already. Construction recorded already. Construction was completed end of the year. Right, it has given land. The construction of new building costing 4 million was completed end of the year. Was completed end of the year. Think about cost incurred for that 4,000. End of the year. Therefore, that asset not available during the account period. Think about when we are going to calculate annual depreciation, new building not available during the account period. New building not available, and this adjustment related to new building has been properly accounted. Therefore, construction was completed end of the year by incurring 4 million, and adjustment related to new building has been properly accounted. Think what here, building account balance available 28,000. That is a closing balance. Reason, building construction recorded already. Construction mean like a purchase. Cash account credit, building account debit. It has recorded already. Therefore, this is a closing balance. This is a closing balance. And annual depreciation also recorded. It has available additional 5. Depreciation for the current year has been recorded. And relevant for building construction also recorded. Therefore, those are closing balance. Building closing balance and accumulated depreciation closing balance. Therefore, those values should be recorded as a closing balance. Right? Think what PP schedule. Property, plant and equipment schedule. Building closing balance 28,000, not opening. And accumulated depreciation also given 8,000. Accumulated depreciation is given 8,000. That is a closing balance. Annual depreciation recorded already 8,000. Now think what construction completed during the account period, incurring 4 million. Cost value 4 million incurred for that. Therefore, that value should be recorded under purchase. Construction, purchase, both are same. Same effect. Therefore, additional information. 7th one. Additional 7th one relevant for construction. Completed. Recorded already. Therefore, cash account credit, building account debited. Therefore, it has recorded already. That value should be recorded PP schedule. Think what closing balance should be included here. And under purchase here, purchase dash construction. Construction. Effect for building increase 4,000. That value should be disclosed here. It has recorded already. Therefore, opening balance can be calculated. This one minus this one equal opening balance. Reason, construction was completed end of the year. It is not available during the current period. We are going to provide information. Therefore, opening balance should be disclosed. Therefore, opening balance equal to 24,000. This one minus this one. Therefore, construction new building completed end of the year. It is not available. Therefore, during the current period, as a building available only 24,000. Therefore, when we are going to calculate annual depreciation, it has already calculated, but that value should be disclosed in the PP schedule. Therefore, depreciation should be calculated based on opening balance, not based on 28,000. Reason, new building is not available during the current period. It was completed end of the year. Therefore, building depreciation rate is given 5%. Therefore, annual depreciation should be calculated based on 24,000. Calculate depreciation. It has given rate built in 5%. Additional fourth one, it has given depreciation rate built in 5%. Think about cannot be calculated based on 28,000. Here included 4,000 construction cost. It has completed end of the year. Therefore, based on 24,000, depreciation rate is given 5%. Then calculate depreciation. Built in depreciation. Here, built in depreciation. Built in depreciation recorded already, but that value should be disclosed in the PP schedule based on 24,000, not 28,000. New building is not available during the current period. Percentage is given 5%. Therefore, this is the annual depreciation. It has already recorded, but it should be included PP schedule. Normally, this value should be included under administration expense also, but it has recorded. It has given composition of administration expense. It has available. Then this value should be included property, plant and equipment schedule. PP schedule as annual depreciation, built in depreciation for the year 1,200. It has already recorded. Closing balance available. Then opening balance can be calculated. This one minus this one, opening balance can be calculated. We are going to provide information. Therefore, opening balance also should be disclosed. It has given closing balance. Therefore, this one minus this one equals 6,800. Then cost minus accumulated depreciation, net book value equal 20,000. Built-in depreciation. At the same time, try to compute office equipment. Office equipment depreciation also included under administration. Therefore, I am going to discuss now office equipment part. Right, office equipment, no adjustment effect. No adjustment effect for office equipment. Therefore, 10,000, both opening and closing balance 10,000. It has not changed during the current period. No adjustment effect. But depreciation recorded 10% rate. This is a closing balance. Annual depreciation recorded already. But you have to calculate annual depreciation. That value should be included PP schedule. This is opening as well as closing. But accumulated depreciation, closing balance. Reason, annual depreciation recorded. But in the PP schedule, you have to disclose annual depreciation also. 10% rate. Right, record PP schedule. PP schedule. Office equipment 10,000, opening as well as closing balance same. Reason, no adjustment effect for office equipment. But accumulated depreciation, it has given closing balance. Annual depreciation also recorded. It has given 2,000. That is not opening balance, closing balance. Then annual depreciation should be included here. Base and cost value 10%. Calculate annual depreciation office equipment. Office equipment annual depreciation. Office equipment annual depreciation. Office equipment depreciation. Office equipment cost value equal 10 million. Variation 1,000, it has given 10,000. Based on that value, percentage is given 10%. Therefore, this is the office equipment annual depreciation. It has recorded already. Think about built-in depreciation 1,200. හොඳට බලන්න මේක දිහා. Built-in depreciation equal 1,200. Office equipment depreciation equal 1,000. Think about total value 2,200. Think about here total value. It has given annual depreciation all recorded. Therefore, here total amount equal 2,200. It has given annual depreciation has been recorded. Depreciation expense account debit, accumulated depreciation account credit. Think about this value available under administration expense. It has given composition, additional second one. See the additional second one. Think about this one. As a depreciation expense, it has given 2,200. It is included built-in depreciation as well as office equipment depreciation. Think about built-in depreciation calculated already. Think about built-in depreciation. Built-in depreciation included here. Built-in depreciation. It has recorded already. Built-in depreciation value 1,200. Built-in depreciation value equal. Value equal 1,200. Built-in depreciation value equal 1,200. And think about office equipment depreciation. Office equipment depreciation. Office equipment depreciation equal 1,000. Those are recorded already. Therefore, it has given expense. Think about here. This value, think about annual depreciation recorded already. Therefore, this is the annual depreciation recorded. It has available under administration expense. Therefore, no need to record again. Here, total value, think about. But that value should be disclosed in the property, plant, and equipment schedule. Cannot be recorded under administration expense again. It has available in the opening balance. Right? But PP schedule, it should be recorded. Property, plant, and equipment schedule. Office equipment not changed during the current period. Therefore, cost value not changed. But annual depreciation recorded. Therefore, closing balance. And annual depreciation equal 1,000. It has calculated. Therefore, opening balance also. This one minus this one. Therefore, opening balance also equal 1,000. At land, building, office equipment, okay. Motor vehicle relevant for disposal. Very important. In this example, disposal adjustment also recorded. See the adjustment number 8. Adjustment number 8, think about this one. You have to prepare separate working for that. Disposal profit and loss should be calculated. And think about cost value. If it has given disposal adjustment, there are 5 things you have to think. This is adjustment number 8. Workings. Right, read carefully. Motor vehicle costing 2,500 was disposed 4,500 on 31st March 20. Think about disposal date, end of the year. This motor vehicle was purchased on 1st October 2018. It is relevant for accumulated depreciation calculation. And this disposal has been properly accounted. This is important thing. This disposal adjustment properly accounted. It means think about cost value, accumulated depreciation, disposal value, profit and loss, annual depreciation, 5 things recorded properly. And here there is a mistake. And loss on disposal of motor vehicle has been recorded under distribution cost. That is error. There are 5 things you have to, if it has given disposal adjustment, you have to consider there are 5 things. First one, cost value of disposal assets. Think about steps. This is the way you have to think. If it has given disposal adjustment, normally there are 6 marks available. Think about first one, think about second one, then third one. Think like this. There are 5 things you have to think if it has given disposal adjustment. First one, cost value of disposal assets. In this example, cost value is given 2.5 million, 1 marks for that. And second one, disposal value disposal value. In this example, disposal value equal rupees 1.5 million. Think about double entry also. And third one, accumulated depreciation. Accumulated depreciation. Accumulated depreciation of disposal assets. Accumulated depreciation of disposal asset. Disposal asset. You have to calculate. This is a purchase date and this is a disposal date. First one, try to recognize how many years use from purchase date to disposal date. Think about how many years use from disposal date to purchase date. Try to calculate accumulated depreciation. Accumulated depreciation should be calculated of disposal asset. First one, recognize how many years use. It can be calculated disposal date minus purchase date. Disposal date minus purchase date. Disposal date deduct minus purchase date. You have to calculate accumulated depreciation. Disposal date is given 31st March 2020. This is the disposal date. And purchase date is given 1st October 2018. 1st October 2018. Then try to calculate how many years used from purchase date to disposal date. 31st minus 1 equal 30. 3 minus 10 cannot be deducted. Therefore, take 1 from here. Here available years. මේ පැත්තෙන් එකක් ගන්නවා කියන්නේ මාස 12ක් කියන්නේ බලන්න. එකක් කියන්නේ අවුරුද්දක්. අවුරුද්දක් කියන්නේ මාස නම් 12ක්. Therefore 12 plus 3 equal 15. 15 minus 10 equal 5. හොඳට බලන්න තේරුණා නැත්නම් ඒක 3 minus 10 cannot be deducted. Therefore take 1 from here. Here available years. तर year එකක් අපි ගන්නවා කියන්නේ මාස නම් 12ක් එන්නේ. Here available month. तर මේ පැත්තෙන් අපි එකක් ගන්නවා කියන්නේ ඒතර මාස වලින් බැලුවොත් 12ක්. Therefore here month available. Therefore take 1 from here. It is equal 12 month. 12 plus 3 equal 15. 15 minus 10 equal 5. Therefore now here available not 20, 19. Therefore 19 minus 18 equal 2. Therefore 2 years, 5 months, 30 days. Roughly 2 years and 6 months. So here 19 available. 19 minus 8 equal 1. Here take 1 from here. Therefore here 19 available. 19 minus 18 equal 1. Therefore from purchase date to disposal date, disposal asset available 1 years and 6 months. 30 days became a 1 month. Therefore 1 years and 6 months. 1 years and 6 months. 1 year and 6 months. From purchase date to disposal date, it is available 1 years and 6 months. Therefore, then calculate accumulated depreciation. Accumulated depreciation you have to calculate. Accumulated depreciation of disposal asset. Cost value equal 2,500 into 20% annual rate. 20%. It has given depreciation rate. Think about motor vehicle depreciation rate. It has given 20%. Therefore, annual depreciation rate equal 20%. But it is available from purchase date to disposal date 1 years and 6 months. Therefore, into 1 and 6 over 12. 1 years and 6 months. Therefore, 1 years and 6 over 12. 1 years and 6 over 12. Then calculate annual depreciation. Therefore, 1 years and 6 over 12. Here, misfraction should be calculated. Therefore, misfraction equal 12 into 1 equal 12 plus 6 equal 18. Therefore, 18 over 12. This is a misfraction. Then take the depreciation 2500 into 20% into 18 over 12. Therefore, this is annual depreciation. Then take the answer here. 2500 into 20% into 18 over 12. Therefore, accumulated depreciation equal 750. Therefore, this is the accumulated depreciation. Accumulated depreciation equal 750. Think what from purchase date to disposal date, it is available 1 years and 6 months. 30 days became 1 month. Therefore, 1 plus 5 equals 6. Disposal date minus purchase date can be recognized how many years use. Therefore, it is available 1 year and 6 months based on cost value 20%. And here misfraction should be calculated. Misfraction. Therefore, accumulated depreciation of disposal asset equal 750. And disposal profit and loss should be calculated. Cost value okay, disposal value, accumulated depreciation. Next step, disposal profit and loss. In this example, it is given disposal loss. Loss on disposal of motor vehicle has been recorded under distribution cost. Therefore, try to calculate disposal profit and loss also. Profit and loss. It has not given, but we have to disclose. That value should be included under other expense, but erroneously recorded under distribution cost. Therefore, you have to calculate. How to calculate? Prepare the disposal accounts. Cost value available, disposal value available, and accumulated depreciation available. Right, prepare the disposal account to calculate disposal profit and loss, T accounts. By preparing disposal account, we are going to calculate disposal profit and loss. Disposal profit and loss. Right, first one, prepare the T account for disposal like this. Then think about cost value of disposal asset, 2.5 million. Motor vehicle account credit, disposal account debit. Only think about disposal accounts. Motor vehicle account credit, disposal account debit. As a motor vehicle account credit, disposal account debit. And accumulated disposal value, cash account debit, disposal account credit. Disposal value equal 1500. Cash account debit, disposal account credit. Therefore, disposal account credit as a cash. And accumulated depreciation calculated, accumulated depreciation account debit, disposal account credit. Therefore, disposal account should be credit 750 as accumulated depreciation. Accumulated depreciation account debit, disposal account credit. Then by closing disposal accounts, disposal profit and loss can be calculated. Take the increase side. Therefore, debit side increase. Take that value credit side. Then think about difference value. This one plus this one, that value should be deducted from this value. Therefore, here difference value equal 250. If difference value available credit side, those are disposal loss. Therefore, this is the disposal loss. Erroneously, that value included under distribution expense. distribution expense. Therefore, disposal loss equal 250. Disposal loss. Therefore, loss equal 250. Values in 1000. This is the disposal loss. Then annual depreciation. Think how to calculate annual depreciation. Those are recorded already. Opening balance is not given. Think how to calculate annual depreciation. First one, record those information. Think about this one. It has given motor vehicle cost value equal 2500. Disposal value is given 31st March 20. This motor vehicle was purchase date is given, and this disposal has been properly accounted. This disposal has been recorded properly. It means cost value deducted from motor vehicle. Disposal value added to the cash accounts, recorded properly. Accumulated depreciation deducted from accumulated depreciation. Therefore, motor vehicle available in the note number 4, additional fourth one, this is not opening balance. This is a closing balance. But annual depreciation should be calculated based on opening balance. Reason disposal date is given end of the year. Therefore, annual depreciation cannot be calculated based on this value. Disposal recorded, annual depreciation recorded. Therefore, those are closing balance. Motor vehicle closing balance equal 16,500 and accumulated depreciation closing balance equal 4,500. Those are should be recorded PP schedule. Closing balance. Record it PP schedule. Opening balance also should be calculated. Reason annual depreciation should be calculated based on their opening balance. Therefore, asset closing balance 16,500 and accumulated depreciation closing balance equal 4,500. Closing balance. Related adjustment has been recorded. Annual depreciation recorded as well as accumulated depreciation recorded. But you have to disclose in the PP schedule. Think about disposal. Cost value recorded. Cost value equal 2,500. Here should be included within brackets. Cost value should be recorded here under cost. Disposal asset cost value should be deducted here. 2,500. It has recorded already. Therefore, think about opening balance. This is the cost value. Recorded already. But we have to calculate opening balance. Disposal date is given end of the year. Therefore, all the motor vehicle available during the current period. This is a closing balance. Based on this value, cannot be calculated annual depreciation. Reason, disposal asset also available during the current period. Therefore, opening balance minus this value equal closing balance. Therefore, this one plus this one, this is the opening balance. Based on this value, you have to calculate annual depreciation. Reason disposal date is given end of the year. Disposal asset also available entire year. Based on this value cannot be calculated depreciation. You have to calculate depreciation based on opening balance. Annual depreciation. Right, calculate annual depreciation also. Therefore, motor vehicle annual depreciation, you have to calculate motor vehicle depreciation. This is annual depreciation. Motor vehicle annual depreciation. Motor vehicle annual depreciation, not accumulated. Annual. How to calculate? Opening balance. Based on opening balance. Opening balance equal 19,000. But additional fourth one, it has given closing balance. Disposal adjustment recorded properly. Therefore, 19,000 into 20%. This is annual depreciation equal 3,800. It has recorded already. Think how to calculate annual depreciation. Based on opening balance should be calculated. Reason, disposal date is given end of the year. Therefore, disposal asset also available entire year. Think about adjustment. It has given disposal date. The motor vehicle costing 2,500 was disposed for 1,500 on 31st March 20, end of the year. Therefore, disposal asset also available entire year. It has given this adjustment has been recorded properly. Therefore, opening balance it has given, closing balance should be calculated. Disposal asset also available, cannot be calculated based on 16,500. It has given motor vehicle 16,500 here. This is the closing balance. After deducting cost value of disposal asset, it has available here. Therefore, opening balance equal 19,000. Therefore, annual depreciation of motor vehicle equal 3,800. Those are recorded already. Now record PP schedule. This is the accumulated depreciation of disposal asset, and this is the annual depreciation. Annual depreciation. Those are cannot be recorded in the expense again. Reason recorded already. But in the PP schedule, we have to disclose. Annual depreciation 3,800. Motor vehicle depreciation for the year. Here 3,800. And accumulated depreciation of disposal asset 750 here minus. Then opening balance should be disclosed here. Think about annual depreciation recorded. Disposal adjustment also recorded. Disposal date is given end of the year. Therefore, when calculating annual depreciation, based on closing balance cannot be calculated. Based on opening balance should be calculated. Reason, disposal date is given end of the year. Right now, opening balance it has not given. That value should be calculated. Think about opening balance plus annual depreciation minus this value equal this one. එන යට ඉඳන් යනකොට deduct කරපු එක add කරන්න ඕන. add කරපු එක deduct කළොත් opening balance එක එනවා. Therefore 4,500. This one plus this one minus this one, take answer here. Therefore 4,500 plus 750 minus 3,800. Therefore opening balance equal 1,450. Property, plant and equipment. අනිත් පැත්තට යන්න ඕන බලන්න ගාන. This is 2018 paper. Annual depreciation recorded. Disposal adjustment also recorded. Now think about property, plant, equipment. This one minus this one. Therefore, net book value equal 12,000. And this one minus this one. Net book value equal 8,000. Then take total amount of net book value here. Now complete PP schedule. Take the opening balance total value also. 25,500. Take closing balance total value. And plus 24,000. Plus 19,000. As well as plus 10,000. Plus 10,000. Therefore, cost value total amount equal 78,500. And construction value add 4,000. And disposal it cost value minus 2,500. And revaluation loss 6,000 minus. Then take here total amount. It should be equal here total value. Therefore, 19,500 plus 28,000 plus 16,500 and plus 10,000. Therefore, here value equal 74,000. If it is correct, it should be equal here total amount also. 78,500 plus 4,000 minus 2,500 minus 6,000. Therefore, this is the total cost value. And take accumulated depreciation also. 6,800, 1,450 and 1,000. Therefore, 9,250. And take annual depreciation total amount also. Here total amounts. Therefore, 6,000. This is a property, plant, equipment depreciation. That value should be included PP schedule also. And disposal, it cost accumulated depreciation should be deducted. Then here total amount should be equal accumulated depreciation total amounts. Therefore 14,500. 14,500. If it is correct, here total amount also same value. This one plus this one minus this one. Same answer, 14,500. Then cost minus this one minus this one. That value should be equal here total amounts. Take the answer, 74,000 minus 14,500. Answer equal 59,500. That value should be equal here total amounts. Therefore, here total amount equal 59,500. Therefore, this is the value should be includes financial position as a property, plant and equipment, 59,500. That value should be includes under non-current assets, financial position, property, plant, equipment, 59,500. Right, think about disposal loss. Read carefully disposal adjustment. Cost value okay, disposal value recorded, accumulated position okay, and disposal loss. Think about there is an error here. It has given this motor vehicle was purchased on 1st October 18. This disposal has been properly accounted for and loss on disposal of motor vehicle has been recorded under distribution cost. Now think about it. Disposal loss equal to 50. Normally disposal loss should be recorded under other expense. But in this example, disposal loss recorded under distribution expense. It is not correct. Therefore, that value should be removed from distribution expense. It should be included under other expense. Therefore, disposal loss erroneously recorded under distribution expense. Right, record it under other expense. Workings as a motor vehicle disposal loss. Motor vehicle disposal loss. Motor vehicle disposal loss erroneously included under distribution expense. Therefore, here minus 250. That value should be included under other expense. Think how to disclose erroneously included distribution expense. Therefore, that value should be deduct here, and that value should be included under other expense. Disposal loss. Try to recognize how it records. Erroneously recorded. It should be removed from distribution expense, and that value should be included under other expense. Motor vehicle depreciation, those are recorded already. It has included opening balance. Therefore, no need to record again. Right. Adjustment relevant for property, plant and equipment. Okay. Now see the adjustment. Fourth one okay. First one we have discussed. Second one discuss. Third one discuss. And fourth one property, plant and equipment also discuss. Depreciation recorded okay 5. Revaluation 6 okay. Construction of building 7 okay. And disposal we have discussed. And ninth one also. There were no other addition or disposal of property, plant, equipment during the year. Those part okay. Now think about 10th one. Very important adjustment. Think about 10th, relevant for warranty. Based on LKS 37, we have discussed provision, contingent liability, and contingent assets. Therefore, additional information, warranty available, 9th one. Additional 10. 10th one, relevant for warranty. Therefore, this is the way you have to prepare working for that. Very important. Opening balance, it has given trial balance. Therefore, warranty adjustment, additional 10. Additional 10th. Read carefully. Company sales product with 1 year warranty period. Company has paid 450,000 was as warranty expense during the current year for sales made in previous year. Again, ගිය පාර warranty එක විකුණපු වගේ කැඩිලා ගෙනල්ලා repair කරන්න මෙච්චරක් වියදම් කරලා. Warranty paid. Company paid. Has paid 450,000 as a warranty expense during the current year for sales made in previous year. ගෙවලා තියෙන්නේ මේ අවුරුද්දේ ගිය පාර විකුණපුවට. This is included under distribution cost, included already. Think about it also. But it is given of the current year and provision for warranty as at 31st March 20 has been estimated to 750,000 closing balance. Opening balance also given. Warranties estimates. අපි දන්නේ හරියටම කීයක් යයිද කියලා කැඩිලා ගෙනලා හදලා දුන්නොත් අපිට හිතෙනවා මෙච්චරක් විතර යයි කියලා. Estimates. If it has given changes in accounting estimates, prospectively should be adjusted. And trial balance, it has given opening balance also as a provision for warranty. It has given provision for warranty. This is the value already considered as expense previous year. Estimated and considered as expense, but actually paid for that during the current period. It has given paid for that only 450. During the current period paid 450, there are two ledger accounts. Opening balance available, closing balance available, paid amount available, normal double entry, warranty expense account debit, provision for warranty account credit. Therefore, prepare the ledger accounts. There are two ledger accounts, warranty expense and provision for warranty. Think about double entry. But in this example, it has given opening balance also, warranty expense accounts, important adjustment, warranty expense account, as well as provision for warranty. Think about trial balance, it has given opening balance also. And other ledger account as a provision for warranty. Provision for warranty. Warranty expense and provision for warranty. First one, take the provision for warranty account, opening balance available, trial balance. It has given trial balance, opening balance as a provision for warranty 670. Think about this one. First April 19. This is the previous year closing balance. Became this year opening balance. This value already considered as expense previous year. There were double entry. Warranty expense account debit, provision for warranty account credited already. Therefore, this value should be included now as a balance brought forward in the provision for warranty accounts. 670. Right, take balance as brought forward. Provision for warranty account 670. Opening balance as a balance brought forward. This is a value already considered as expense previous year. Now think about this year warranty. Closing balance it has given here 750. මේ තමයි මේ පාර warrantyත් එක්ක විකුණපුවට කැඩිලා ගෙනල්ලා හදලා දෙන්න වෙයි කියලා අපිට හිතෙන ගාන. It has given the provision for warranty as at 31st March 20 has been estimated. This is not actual value, estimated. අපිට හිතෙනවා මේ යන විදියට මේ පාර warrantyත් එක්ක විකුණපුවටත් මෙච්චරක් විතර කැඩිලා හදලා දෙන්න වෙයි. Estimate. That is not actual value. If it has given changes in accounting estimate, prospectively should be adjusted. Think what we have discussed: lifetime change, residual value change, depreciation method change. Those are relevant for property, plant, equipment. And here warranty, income tax. Think about under provision or provision. Therefore, closing balance equal 750. Closing balance. Opening balance this one. Think about under provision or provision. Therefore, closing balance should be recorded. Closing balance carried down. It has given closing balance also. Therefore, balance should be carried down. Closing balance records. Balance carried down and balance brought forward. Therefore, closing balance equals 150. That value balance carried down. Balance carried down, closing balance equals 750. Like a doubtful debts. Therefore, here balance brought forward. Therefore, closing balance equals 750. Opening balance sheet has given trial balance, that value should be included as a balance brought forward. And closing balance sheet has given estimated value, balance carried down, that is a liability. And warranty paid amount is given for last year, but paid during the current period. It has given company has paid 450 as a warranty expense during the current year. During the current year, for sales made in previous year, paid in cash, cash account credit, warranty expense account debit. It has given this is included under distribution expense recorded already. But this is not correct value. Think what is correct double entry. Cash account credit, warranty expense account debit as a cash. That value recorded already. Therefore, no need to record in the cash accounts. It is included distribution expense. But this is a double entry. Cash account credit, warranty expense account debit. Then, but income statement should be included after adjusting previous year gap. Therefore, if there is a difference, that value also should be transferred to the warranty expense accounts. Like doubtful debts, estimate change. If there is a difference, that is a value should be considered as expense. Therefore, think about provision for warranty accounts. This is a paid amount. Then, if there is a difference, think about increase side, increase debit side, take total amounts. Make a difference එකත් warranty expense එකට මාරු කරන්න ඕන. Debit side increase 750. Take that value credit side. Take that value credit side 750. Then difference value think about 750 minus 670. Therefore, difference value equal 80. That value also should be considered as expense. Now think about double entry. Warranty expense account debit, provision for warranty account credit, 80,000 also. Therefore, here as a warranty expense, double entry. Name of other ledger accounts. Difference value estimate change. Warranty expense account debit, provision for warranty credit, only 80,000 under provision. Therefore, here as a provision for warranty. Think about estimate change. Opening balance sheet is given and closing balance should be carried down and paid amount is given. Cash account credit, warranty expense account debit, and estimate change. It difference value also should be transferred to the warranty expense accounts. Now, warranty expense could be closed. Expense close. Therefore, debit side take the total value. Debit side total amount equal 450 plus 80 equal 530. Take that value credit side. Expense account should be closed. Therefore, 530 difference value as an income statement. This is the value should be considered as a warranty expense. This one income statement. Therefore, this is the value should be included under distribution expense as a warranty expense. This is the value should be included under current liability as a provision for warranty. But in this example, paid in cash 450 erroneously included distribution cost. This is the correct value should be considered as expense. But already warranty paid in cash 450 included. Think about this part, very important. The company has paid 450 as a warranty expense during the current year for sales made in previous year. This is included under distribution cost. Think about distribution cost, total value is given. It is include this value, but as expense should be considered only this value. This is value should be included as a warranty expense under distribution expense, but already paid amount included. Therefore, this value deduct, this value add, and provision for warranty, this value under current liability. There are 3 marks available. Think about paid in cash, it has included under distribution expense, and this is value should be considered as expense, and provision for warranty, this is liability. Right, disclose on the financial statement. First one, think about expenses under distribution expense as a warranty paid, paid amount 450 included, that value should be deducted. That is not correct value. Then think about warranty expense. As a warranty expense, you have to consider 530. This is the correct value, should be considered as expense, but already paid amount included. Therefore, that value should be deduct from distribution expense, and correct value should be included as a warranty expense. Warranty paid. This is not expense. This is expense, but paid amount includes opening balance. Deduct, and further year value should be added. And closing balance as a provision for warranty 750. Closing balance equal 750. That value should be included under current liability. Note number 7. Note number 9 as a provision for warranty. As a provision for warranty, only closing balance. Therefore, closing balance equal provision for warranty closing balance equal provision for warranty closing balance equal 750. Think about adjustment. This is value should be included under current liability, and this is value should be included under expense, but already paid amount included under distribution expense. Therefore, that value should be deduct. Right. Additional 10th also okay. Next adjustment. 9th one. This is 2018 paper. 9th one. 11. The 11 for bank loan. Read carefully. 11th one. Think about like a leasing. Bank loan also should be recorded separately. Prepare working for that also. Read carefully 11th adjustment. Bank loan obtained end of the year. Our account period end of the year 31st March 20. Is payable in 5 annual installment of 3,580. Each commencing from 31st March 21. Our account period end of the year 31st March 20. In a loan may out the given loan obtained end of the year. Therefore, loan is not available during the current period. Therefore, no need to calculate loan interest current year. Current year loan interest not available. Reason loan obtained end of the year. In a loan may out the tibila ne. In the interest expense with the gun known. But this loan should be settled from next year. And it has given interest rate 15%. Therefore, loan is a liability, but it should be paid with installment. Next year also we have to pay. Think about like leasing. Within 1 year settled amount should be included under current liability. Balance part should be included under non-current liability. Therefore, loan available trial balance. Next year first installment we have to pay. Therefore, next year paid amount as a loan should be included under non-current under current liability. Balance part should be included under non-current liability. Think about loan available trial balance. It has given loan, bank loan, 12,000. Total value cannot be included under non-current liability, cannot be included now. Reason it should be paid with installment. Next year also we have to pay. Therefore, think how much should be included under current liability. Like leasing, bank loan also should be recorded separately. Current liability as well as non-current liability. Right, prepare the working for that. Loan equal 12,000. That value should be recognized separately. Therefore, loan. Think how much should be included under current liability. Loan value equal 12,000. This is a loan liability. Think how much should be included under current liability. How much should be included under non-current liability. Like leasing, same theory. Loan should be paid with installment. Therefore, think about under current liability. How much should be included? Under current liability. And under non-current liability. under non-current liability. Loan should be recognized separately, current liability and non-current liability. Under current liability should be included installment minus next year interest. Installment minus next year interest. Like leasing, next year, not current year. Next year interest. Installment minus next year interest should be included under current liability, and balance part should be included non-current liability. It has given installment 3,580 annual installment, and interest can be calculated. Loan value we know, loan value equal 12,000. Then try to calculate interest. Loan value equal to 12,000. Annual rate is given 15%. Loan obtained end of the year. Therefore, loan is not available during the current period. Loan interest no need to consider as expense. Next year interest, current interest not available. Next year interest, from next year interest should be paid. Recent loan obtained end of the year. Therefore, you have to calculate next year interest, not current interest. Loan value is given. Calculate next year interest. Therefore, next year interest equal loan value equal to 12,000 and interest rate is given 12%, so 15%. Therefore, this is the next year interest. Therefore, next year interest equal 1,800. Then think how much should be included loan and current liability. Installment equal 3,580. Therefore, 3,580. Think about values in 1,000. This is installment minus next year interest equal 1,800. Then take the answer. That is the value should be included under current liability as a lease creditor. 3,580 minus 1,800. Therefore, 1,780. This is the value should be included under non-current under current liability as a loan. Loan total value cannot be included under non-current liability. Reason it should be paid with installment. Next year also we have to pay. Under current liability as a loan should be included installment minus next year interest. Installment minus installment minus next year interest. Then balance part, total loan equal to 12,000. Therefore, balance part should be included under current liability. Therefore, 12,000 from that value should be deduct 1,780. This is the total liability. From that value under current liability should be included this value, and balance part 12,000 minus this value should be included under non-current liability. Therefore, 12,000 minus 1,780. Therefore, 10,220. That value should be included under non-current liability as a loan. Think about loan also should be disclosed separately. Loan. Interest not became expense during the current period. Reason loan obtained end of the year. Therefore, this is the way you have to disclose loan under current liability as well as under non-current liability. අපි loan එකක් ගත්තොත් ආපහු ගෙවන්න ඕන බලන්න. ඒතර ගෙවන්නේ installment විදියට. Therefore, next year also we have to settle. Therefore, within 1 year settlement should be included under current liability and balance part should be included under non-current liability. Loan like a leasing. Therefore, 1,780 under current liability and balance part under non-current liability as a loan. Loan interest cannot be considered as expense this financial year. Reason loan is not available during the current period. Right now records financial position as a loan, as a bank loan under non-current liability. Under non-current liability 10,220. Under current liability as a bank loan 1,780. Total value equal 12,000. Therefore, this is the way your disclosed loan. Lease is not available, debentures not available. Only bank loan available. Right. Adjustment number 11 also okay. Think about last adjustment. Warranty we have discussed. As well as bank loan we have discussed. And next one 11 for income tax adjustment. 12th one. Try to recognize under provision or provision also. And trial balance is given as income tax paid amount total value. Income tax adjustment should be done. Note number 3. Additional 12. Read carefully. First one is the trial balance. It has given total income tax. Income tax paid. Think about this one total value. It has given directly. It is included last year last quarter paid amount as well as this year first 3 quarter paid amounts. And given provision for income tax for last year last quarter, it is relevant for under provision or provision. Therefore, think about income tax paid amounts. Income tax paid amounts as well as provision for income tax. Provision for income tax. Total paid amount is given. Think about this one and this one. Not given separately. Sometime it is given last year last quarter paid amount and this year first 3 quarter paid amount given separately. But in this example not given. Total value is given. Now see the adjustment number last one 12. It has given income tax paid includes 350,000 paid for previous year. Total paid amount is given 1,100. It is included 350 paid amount for last year last quarter. Total paid amount equal 1,100. Income tax paid includes 350 paid for previous year and first 3 quarter paid amounts. Therefore, total paid amount equal 1,100. It has available trial balance debit side 1,100. It is included 350 paid for last year last quarter. Therefore, can be recognized first 3 quarter paid amounts. It is given here. Income tax paid includes 350 paid for previous year and first and payment for first 3 quarter. Therefore, 1,100 minus 350 equal first 3 quarter paid amounts. This is the first 3 quarter paid amounts. And given income tax liability for the last quarter of the current year was estimated 400. This is the this year last quarter estimate value. And this is the first 3 quarter paid amounts. And this is the last year last quarter paid amounts. And trial balance available last year last quarter estimate value also. This is first 3 quarter paid amounts. And this is the this year last quarter estimate value. Right, more adjustment note number 3. Income tax should be adjust note number 3. First 3 quarter paid amount is not given directly. First 3 quarter paid amount is not given, but given total paid amounts equal 1,100. From that value should be deduct 350 paid for previous year last quarter. 350 paid for previous year last quarter. Therefore, 1,100 minus 350. Therefore, 750. That is the first 3 quarter paid amounts. And given last quarter estimate value. This year last quarter estimate value is given 400. Therefore, this is the income tax liability for the year. Therefore, here total amount equal 1,150. This is income tax liability for the year. Think how to calculate first 3 quarter paid amounts and last quarter estimate value. It is given directly. Then can be recognized first 3 income tax liability for the year. Then you have to adjust previous year difference under provision or provision. This is the paid amount. Income tax paid includes 350 paid for previous year. For previous year paid 350. See the trial balance. It has given previous year last quarter estimate value also. Trial balance available previous year last quarter estimate value equal 450. Credit side available as a provision for income tax for the year end 31st March 19. This is the this year last quarter estimate value, but actually paid for that equal 350. During the accounting period paid for last year last quarter 350, but provided 450. Provision එක වැඩි, therefore that is a over provision. 450 provided, but actually paid for that 350. 350 paid for last year last quarter, but provision equal 450. Difference value equal 100 over provision. If it is over provision, that value should be deduct. Think about provision 450, but actually paid for that equal 350. Therefore, provision is over provision 100. If it is over provision, that value should be deduct. Therefore, over provision 100 within brackets. Over provision. How to recognize? It has given provision 450, but paid amount equal 350. Therefore, difference value 100, that is a over provision. Therefore, this is the value should be considered as expense 1050. This is a value should be included in income statement as income tax expense, as well as this year last quarter estimate value under current liability. Therefore, this is a value should be included under current liability as a provision for income tax or income tax payable. But income statement should be included 1050. Right, record income statement under current liability as income tax payable. This year last quarter estimate value 400, and income statement last column within brackets as income tax expense 1050 within brackets as expense. Right, all the adjustment okay. Now trial balance should be complete from the beginning. Trial balance. Think what adjustment very important. This is a A-level paper. First one inventory we have discussed. Second one it has given composition of administration expense. Third one EPF adjustment. Then property plant equipment balances it has given. Depreciation recorded. Land second time revaluation. Building loan for construction end of the year completed. Relevant for motor vehicle disposal end of the year recorded properly. And warranty adjustment 10th one. Opening balance also given. Think about under provision or provision. And bank loan like a leasing should be recorded separately as a current liability and non-current liability. Loan obtained end of the year. No need to consider loan interest during the accounting period. Loan is not available. As well as income tax not given separately. Last year last quarter paid amount and first 3 quarter paid amount separately not given in the trial balance, but given additional information. Right, now trial balance should be done from the beginning. Think about there are 7 steps to be applied. First one additional information, second one trial balance, third one workings, fourth one notes, fifth one income statement, sixth one change in equity, seventh one statement of financial position. Think what path. Now additional information okay. Now move to the trial balance from the beginning. If it has not considered, you have to consider. Property, plant and equipment consider. Purchase under cost of sales calculation 41,850 as a purchase under cost of sales calculation. Record it under workings as a purchase. First column value equal 41,850. Then see the trial balance. Purchase okay, and trade receivable 22,600. It has not given provision for doubtful debts. Therefore, this value can be included directly under current assets. If it has given provision for doubtful debts, also should be deduct. But in this example, not given provision for doubtful debts. Therefore, trade receivable under current assets 22,600. Record financial position under current assets. No need to prepare working for that. As a trade receivable, value equal 22,600. Trial balance should be done from the beginning. Then trade receivable, okay. Next one, opening inventory 9,750 and the cost of sales calculation. This one, cost of sales calculation 9,750. Right, under workings, cost of sales calculation, second column, value equal 9,750. Opening inventory and the cost of sales calculation. Complete like that. Next one, cash and cash equivalents. Trial balance is given cash and cash equivalents 1,250 and current assets. Current assets. Right, financial position and current assets. As a cash and cash equivalents 1,250. Like that, trial balance should be done from the beginning. Then debit side, okay. And see the credit side. Sales it has given 83,000. Income statement and trade payable current liability. Sales income statement, trade payable current liability. Record it. Income statement as a sales 83,000 and under current liability trade payable it is given trade creditor it is equal trade payable value equal 12,500. Then see the trial balance and given accumulated administration expense it has given trial balance. Those are recorded already. That value should be included under accrual expense and other current liability. Note number 9. Therefore, note number 9, accrual administration expense. Accrual administration expense value equal 250. Accrual administration expense value equal 250. Right, then trial balance other parts. See the trial balance. It has given commission income. Commission income should be included under other income. Other income, note number 1. Therefore, commission income equal 3,250. Note number 1. Commission income, note number 1. 3,250 as commission income and other income as a commission income value equal 3,250. The value equal 3,250 commission income. Commission income, that's other income. Then trial balance also okay. Step number 2, trial balance. Right, first one additional information okay. Second one trial balance okay. And third one note workings. Workings should be complete. And the workings available cost of sales calculation as well as expenses. Now calculate cost of sales and expenses. This is a cost of sales. It has given only purchase. This value should be included last column. Therefore 41,850. Then plus opening inventory 9,750 plus 41,850. Therefore cost of sales equal 51,600. So from this value deduct closing stock 10,500 deduct 51,600 minus 10,500. Therefore 41,100. This is the cost of sales. That value should be included in income statement. Cost of sales should be included in income statement. 41,100. Record it income statement. within brackets 41,100. Then take the total amount of expense also. Expenses total value should be calculated. Take here total value. Distribution expense. This one plus minus minus plus value equal 9,680. And administration take total value expense. Administration 7,850. And other expense total value equal 1,650. Finance expense 0. Think what loan interest not available. Loan obtained end of the year. Leasing not available. Then those values should be included in income statement. Think what work in 30 steps. That income statement first column. Distribution expense value equal 9,680. Administration 7,850. And other expense 1,650. But finance expense 0. Right. Then notes. First one additional information. Second one trial balance. Third one work-ins. Fourth one notes. Now complete notes. Note number 1. Note number 1, other income available 3,250. That value should be included in income statement. It has given only commission income. Income statement last column 3,250 here other income 3,250. Then note number 2. Note number 2, no need to calculate total value. But here disclose important expense. Following expenses are deducted before calculating profit before tax. Under it, we have to disclose important expense. Example, if it has given audit fees, if it has given direct fees, should be included note number 2. Under additional second one, it has given composition of administration expense. It has available direct fees and auditor's fee. Those are important expense, should be included under note number 2. Direct fees equal 1,500. Auditor's fees it has given 610. Those are given separately to disclose under note number 2. Note number 2, no need to calculate total value. We have to disclose important expense. Following expenses are deducted before calculating profit before tax. Therefore, here should be included direct fees and auditor's fee, as well as property, plant and equipment depreciation. Property, plant and equipment depreciation. Take the property, plant, equipment depreciation also. Property, plant and equipment depreciation. It has available PP schedule. Therefore, you have to calculate property, plant and equipment depreciation. Total value should be included here. Therefore, property, plant and equipment, PPE depreciation. Property, plant and equipment depreciation. Take total value. It has available note number 3. Note number 4. It has given depreciation for the year. Total value equal 6,000. Building depreciation, motor vehicle depreciation, office equipment depreciation. Total value should be included. 6,000 as a property, plant and equipment depreciation. Property, plant and equipment depreciation. Important expense, as well as if it has given stock written off, it has available income under work-ins, stock written off. Important expense should be disclosed. Stock written off equal 400. stock written off value equal 400. Like that, important expense should be disclosed under note number 2. See the workings expense column. Important expense, stock written off, okay, as well as employee related expense. As employee related expense, think about salary equal 3000, but here 300 available. Salary, EPF expense and ETF expense as employee related expense under note number 2. Important expense for decision making should be disclosed as employee related expense. Employee related expense as employee related expense 3000 gross salary as well as EPF contribution of employee 750 and ETF contribution of employer is given. ETF contribution of employer, it has available additional second one 90,000. Expense should be disclosed note number 2. Employee related expense, therefore plus 90. This is salary, gross salary should be considered as well as contribution of employer for EPF and ETF. Those are called employee related expense. Take total value 3,540. 3,540. Like that, important expense for decision making should be disclosed note number 2. Total value no need to calculate. අඩුම ගානේ කරුණු 4ක්වත් දාන්න ඕන මෙතන. Right, separate marks available. And income tax we have discussed, it has recorded already. And note number 4, property plant equipment we have discussed. Leasing not available. Provision for doubtful debts it has not given. Therefore, no need to prepare working for that. And prepaid expense also not available. Cash and cash equivalents not given separately. But think about accrual expense and other current liability. Here total amounts. Therefore, total amount equal 1,750. 1,750. That value should be included under note number 9. 1,750 as accrual expense and other current liability. Financial position 1,750. Right. Think about step first one, additional information. Second one, trial balance. Third one, work-ins. Fourth one, notes. Step number 4, complete. Now, income statement. Then statement of change in equity. Then financial position. Start from the beginning. Try to complete income statement. Calculate gross profit plus other income minus expense. Therefore, this one minus this one, gross profit equal 41,900. Right, take here answer. Right, when we are going to prepare notes here, again, මෙතන information එන්නේ නැත්තම් note දාන්න ඕනේ අපි මේකට. But normally, those are the notes. If it has not given leasing, no need to disclose this note. If it has not given provision for doubtful debts, this one no need to disclose. If it has not given prepaid expense and other currencies, no need to disclose. But normally, those are the notes. If available, should be prepare notes. If it has not given information, no need to disclose. එතන මේ note numbers වෙනස් වුණාට ප්‍රශ්නයක් නැහැ. මේව නැත්නම් මේක තමයි note number 5 in. Right, complete income statement from the beginning. Complete income statement. Gross profit should be calculated. Sales minus cost of sales. Gross profit equal 41,900. Then plus other income. Therefore, value equal 45,150. And take total expense within bracket last column. Total expense. Here total value 19,180. 19,180. Then this one minus this one, take answer. that is profit before tax 25,970. Then deduct income tax. Profit for the year can be calculated. This one minus income tax. Therefore, profit for the year equal 24,920. And revaluation loss within brackets 5,000. Therefore, take the answer here. This is the total composite income equal 19,920. Then total composite income should be recorded in the statement of change in equity. In the statement of changes in equity. Think how it records. Profit for the year. Those are the values should be recorded. Profit for the year should be recorded retained earning column. This one should be recorded retained earning column. Retained earning column should be recorded profit for the year. And other composite income, that value should be recorded revaluation reserves column. Revaluation reserves. And total value should be recorded total column. Total value should be recorded total column. Think how to record total composite income. This is the total composite income. This one retained earning column. This one revaluation reserves column within brackets. And total value total column. That then records as a total composite income. Total value equal 19,920. 19,920. And profit for the year 24,920. Retained earning column 24,920. As well as revaluation reserves within brackets 5,000. Share issue is not given. And dividends paid also not given. And transfer to the general reserves is not given. 2018 paper. Right now, take total value each column. Take total value. Ordinary shares 35,000. Revaluation reserve 0. General reserve 0. And retained earning. Take the total value. Retained earning total value equal 31,800. 31,800. And total value. Here total amounts equal 66,800. 66,800. Right, then those should be recorded financial position. Ordinary shares 35,000. Retained earning 31,800. Record financial position. Ordinary shares closing balance also equal 35,000. And revaluation reserve 0. Revaluation reserve account balance not available. General reserves also 0. Retained earning 31,800. Then ordinary shares take last column. Reserves total value 31,800. Then take total equity equal 66,800. Under non-current liability, it has given bank loan 10,220. As well as current liability, take the total value 16,430. Then take the total assets. Right of use asset not available. Fixed deposit investment not available. Therefore, no need to disclose here if it is not given. No need to disclose. Therefore, non-current assets total value equal 59,500. And current assets total value equal 33,950. Take total assets 93,450. And take liability and equity. Here total amount also equal 93,450. This is the 2018 paper. Think what there are more related transaction. Part of adjustment has been recorded. Think about important point this one. Provision for warranty opening balance is given. Think about it. Property, plant and equipment carrying amount is given. Important. Income tax paid amount it is given total value at once. And bank loan it is given obtain end of the year. Loan also should be separate current and non-current liability. And expenses it has given total value administration distribution cost all recorded. Therefore, those are should be included as a balance brought forward. And accrual administration expense available trial balance. It means accrual expense recorded already. Only under current liability, this value should be included. And think about first one, inventory adjustment. Second one, very important. It has given composition of administration expense. Think about salary paid amount available. Correct value equal 3,000. But administration expense included 2,700. Contribution of employee not recorded. Contribution of employee also part of salary. And direct fees, auditors fees given separately. Employee trust fund recorded already, but ETF payable account not available. Those value transferred to the central bank, paid in cash. And gross salary should be calculated. Then contribution of employee and employer should be recorded. And property, plant equipment important. Depreciation rate is given. Try to recognize balances opening or closing. It has not given clearly. මේ ගානේ තියෙන වැදගත්ම part එක තමයි property, plant and equipment. Think about land opening balance, but all other thing closing balance. Office equipment opening and closing balance both are equal. Think about how to decide accumulated depreciation. There are two adjustment effects. Annual depreciation, think about, and if it has given disposal, it accumulated depreciation also effect for accumulated depreciation accounts. Therefore, try to recognize given balances are opening or closing. මේව අපි ගත්තේ ගමන් කෙලින්ම opening කියලා දාන්න බෑ. 31st March 20 දුන්නයි කියලා closing balance කියලා එහෙම දාන්න බෑ. Read related adjustment. Very important property, plant equipment. And land it has given second time revaluation. Relevant for building construction completed end of the year. And motor vehicle relevant for disposal recorded, but disposal loss erroneously included under distribution expense. And warranty adjustment, very, very important. Opening balance also given. Think about under provision, over provision also. Bank loan also should be recognized separately as a current and non-current. And last one, income tax adjustment. Right, company sum okay. Think about workings. And those are the financial statement. Now you have to know based on financial statement how to take decision. Ratio analysis also we have discussed based on answer of the company sum. Lesson 13, ratio analysis. Ratio analysis we have to discuss based on answer of the company sum. When we are going to take decision, we are going to provide information to the interest party to take decision. Therefore, you have to know how to take decision based on financial statement. When stakeholders going to take decision based on their financial statement, based on nominal value, cannot be take decision. ඒකනේ මේ රුපී වැලියු එක දිහා බලලා අපිට මේ බිස්නස් එක වෙන බිස්නස් එකකට වඩා හොඳයිද ගිය අවුරුද්දට වඩා හොඳයිද කියලා එහෙම බලන්න බෑ. By comparing rupee value, you have to calculate ratio. Profitability ratio, liquidity ratio, leverage ratio, and efficiency ratios, as well as investment ratios. Lesson 13 also relevant for company sum. 5 type of ratio we have discussed. Profitability, to generate, ability to generate profit. අපි බලනවා මේ බිස්නස් එකට කොයි වගේ ability එකක් තියෙනවද profit එක generate කරන්න. Profitability, gross profit ratio, net profit ratio, return on asset ratio, return on equity ratio. We will discuss later. Just think about ratio analysis also relevant for company sum. Based on answer of the company sum, we have to calculate ratio. When stakeholders going to take decision, they have to use ratios. Profitability, and liquidity, ability to settle short-term liability, current ratio and quick ratio, and efficiency ratios, efficiency, debtor turnover ratio, debt collection period, inventory turnover ratio, inventory resident period, efficiency ratios, as well as leverage ratio. Leverage mean ability to settle long-term liability. Bank එකක් loan එකක් දෙනකොට බලන්නේ leverage එක දිහා තමයි බලන්නේ business එකේ. Leverage ratio. As a leverage ratio, we have discussed there are three ratios: debt ratio, debt equity ratio, as well as interest coverage ratio. As well as we have to discuss investment ratio. When we are going to purchase shares in the share market, when we are going to invest, when business going to invest in the share market, we have to consider investment ratios, dividend per share, as well as earning per share. Therefore, ratio analysis, lesson 13, also relevant for company sum. Based on, we are going to provide information to the stakeholders to take decision. Therefore, when stakeholders going to take decision based on their financial statement, you have to calculate ratio, as well as cash flow statement. Also, we have to discuss with company sum. Cash flow also, it has given answer of the company sum as a question. When we are going to prepare the cash flow statement should be prepared based on answer of the company sum. Direct method, indirect method, operating activities, financial activities, one of financial statement. Therefore, company very, very important. Our ultimate objective, we are going to provide information to the interest party. How to provide information? By preparing financial statement. This is a financial accounts. We have to apply accounting standards, accounting concepts, legal requirements, and format available. But management accounts, there is no specific format, no standards, no concepts. Therefore, management account very easy. Financial account very, very important. And MCQ also, there are 50 questions available. Out of 100 marks, 50 marks relevant for MCQ. ගොඩක් ළමයිගේ රිසර්ච් එක අඩු වෙන ඉෆෙක්ට් වෙන්නේ MCQ paper එකෙන්. Right. Next one, question number 2 වලට යන්න. Relevant for CVP analysis. Question number 2, relevant for CVP analysis. Right, think about under cost volume profit analysis. We have discussed already how to calculate contribution per units and contribution to sales ratio, variable cost to sales ratio, break even point quantity and break even point value, margin of safety quantity, margin of safety value, and profit calculation we have discussed. And graphical presentation, traditional break even point charts, profit volume charts, as well as contribution break even point charts. Right, now see the example, this one MCQ paper relevant for CVP analysis. Read carefully. Company produce single product and sales at 60 per units. Selling price is given and company sales 16,000 units. The loss per unit is given 10. If the company sells 16,000 unit, loss per unit is given 10. If sales quantity 40,000, profit per unit is given 8. Think what normally in this lesson, all the cost can be divided by two parts, variable cost and fixed cost. Variable cost mean when quantity increase, total cost also increase proportionately. But unit variable cost, total variable cost vary with number of quantity. When quantity increase, total variable cost also increase. When quantity decrease, total variable cost also decrease. But unit variable cost not change. And fixed cost, it is not depend on quantity. Quantity increase or decrease, total fixed cost not change. Right, in this example, it has given quantity and profit and loss it has given. They ask total fixed cost, contribution per units, and break even point quantity. Right, prepare working like this. It has given quantity and unit profit and loss is given. Quantity is given, unit profit and loss. Unit profit and loss is given. That when quantity 16,000, when quantity 16,000, unit loss is given. When quantity 16,000, unit loss is given 10. If it is loss, record within brackets. Very important theory available in this example. This is a past paper question. Unit loss is given. And when quantity 40,000, unit profit equal 8. When quantity 40,000, unit profit is given 8. Sometime it has given unit cost. In this situation, total cost can be calculated. I have discussed if it has given unit cost. Right now, think what unit profit is given. Profit and loss. You can calculate total profit and loss. Total profit and loss. Unit profit and loss is given. You can calculate total profit and loss. Think what here total loss equal 160,000. When quantity 16,000, total loss equal 160,000. When quantity 40,000, unit profit is given. Therefore, total profit can be calculated. This one into this one, 320,000. Now think about theory. Quantity increase. When quantity change. When quantity change, quantity increase by. Think about quantity increase by. Here differential think about. And profit also change as a result of what? Think about. When quantity change, I have discussed total cost change as a result of variable cost. That part I have discussed. But here quantity change, think about quantity increase by how much? 40,000 minus 16,000. Therefore, quantity increase by 24,000. Here quantity increase by 24,000. Quantity increase by 24,000. When quantity increase, total profit increase how much? Think about profit increase how much? Profit increase by how much? Think about. හිතන්න ආන්සර් එක මොකක්ද කියලා. ගොඩක් කට්ටිය වැරදි හිතන එක බලන්න. When quantity increase, here difference value how much? Think about. හොඳට හිතන්න. Here difference value equal this one minus this one. How much? This one minus this one equal 3,200 minus 60. Therefore, here difference value equal 480,000. This one minus 160. This one. Think about this one minus 160. Therefore, here difference value. බලන්න ගොඩක් කටේ දැන් මේක ප්‍රශ්නයක් කරා මේක ආවේ කොහොමද කියලා. Think about this one. How to calculate? 3,200 minus 160. Minus became a plus. Therefore, this one minus became a plus. Therefore, 320 plus 160 equal 480. Therefore, here profit increased by 480. When quantity increase 24,000. Now, what is theory? When quantity increase, profit increase as a result of contribution. Therefore, contribution per units. There are three equations available. Think what you know how to calculate contribution per units. Selling price minus variable cost now cannot be applied. Now contribution per unit equal. Think how to calculate contribution per units. Now cannot be calculate selling price minus variable cost. Therefore, when quantity increase, this is theory. When quantity increase, total cost increase as a result of variable cost. But when quantity increase, profit increase as a result of contribution. Therefore, contribution per unit can be calculated. Contribution per unit, very important, equal changes in profit. Profit change. Changes in profit divided by changes in quantity. Changes in quantity. Think about selling price minus variable cost. And I have discussed total contribution divided by quantity equal contribution per units. But here cannot be applied those equation. Profit is given when quantity increase, profit increase as a result of contribution. Therefore, contribution per unit equal changes in profit divided by changes in quantity. Now take the answers. Changes in profit equal 408,000 divided by changes in quantity equal 24,000. Therefore, this one divided by this one. Therefore, contribution per unit equal rupees 20. Therefore, contribution per unit equal rupees 20. Think how to calculate. Not given selling price, not given variable cost. If it has given selling price minus variable cost can be calculated. If it has given total contribution divided by quantity can be calculated. But here it has given profit and loss. When quantity increase, profit increase as a result of contribution. That is a thing keep in mind. As well as sometimes it has given cost, unit cost, total cost can be calculated. When quantity increase, total cost increase as a result of variable cost. Those are the thing keep in mind. When quantity increase, total cost increase as a result of variable cost. When quantity increase, total profit increase as a result of contribution. This is a contribution per unit equation. Cannot be calculated by using selling price minus variable cost. Right. Therefore, contribution per unit they ask. Therefore, part B answer 20. And they ask total fixed cost. Total fixed cost they ask. Therefore, we know profit equation. Think about profit. We know now. Profit can be calculated total contribution minus total fixed cost. Therefore, contribution per unit we know. When quantity 40,000, profit also we know. Therefore, by using profit equation can be calculated total fixed cost. This is a profit equation. Profit equal total contribution minus total fixed cost. There's total fixed cost. Profit we know. Apply this one or this one. Think about here profit equal to 320. Therefore, profit equal 320. Apply this one. Therefore, profit equal 320. We are going to calculate total fixed cost. And total contribution can be calculated. We know contribution per units 20 into when profit 320, quantity equal 40,000. Therefore, 40,000 quantity into 20, that is a total contribution minus total fixed cost equal profit. Therefore, this one take answer here 320,000 equal here total amount equal 20 into 400. Therefore, value equal 800,000 minus total fixed cost. Therefore, this one take other side, this one take other side, then can be calculated. Take the answers. total fixed cost they ask. Therefore, this one take other side, therefore became a plus. Therefore, total fixed cost equal 800,000. This one take other side became a minus 320. Therefore, total fixed cost equal 408,000. This is the total fixed cost and this is the contribution per units. Then last requirement they ask break even point quantity. Total fixed cost we know, contribution per unit also we know. Then write the equation. Break even point quantity equal total fixed cost divided by contribution per units. BEP quantity. They ask rupee quantity unit. Therefore, break even point quantity equal total fixed cost divided by contribution per units. Therefore, total fixed cost already calculated. It is equal 408,000 and contribution per units. Contribution per unit already calculated. It is equal 20. Then take the answers. Total fixed cost divided by contribution per units. Therefore, 408,000 divided by 20. Therefore, break even point quantity equal 24,000. As is a quantity. As is a quantity. Therefore, this is the break even point quantity. Break even point quantity equal 24,000 and total fixed cost equal 408,000 as well as contribution per unit equal 20. Think about requirements. They ask contribution per units rupees 20. Write the answer. And total fixed cost equal 408,000 rupees 408,000 total fixed cost as well as break even point quantity equal 24,000 quantity. Break even point quantity equal 24,000 quantity units. Think about CVP analysis. When quantity change, total profit change as a result of contribution. That next one. Question number. Next one, read carefully. Question number third one. Also relevant for CVP analysis. Read carefully. Think what would be the answer. Amal PLC produce and sales 50,000 units and given product annually. Prime cost per unit is given 20 prime cost, which consists only variable cost. Prime cost total value equal variable cost. And manufacturing overheads as well as non-manufacturing overheads are 2 million and 1,500. Overheads, manufacturing and non-manufacturing, respectively at an activity level 50,000 units. And fixed cost of company amount in 60% of total overheads. It has given overhead also can be divided by two parts, variable overhead as well as fixed overheads. It has given prime cost is given, prime cost per unit. It is variable cost. Prime cost per unit equal rupees 20 per unit. It is a variable cost. And production and non-production. Manufacturing overhead is given. manufacturing overheads as well as non-manufacturing overhead is given. Manufacturing overheads, non-manufacturing overheads, total value is given. It is include variable as well as fixed cost. Manufacturing overhead is given 2 million. Non-manufacturing overhead is given 1.5 million. Therefore, think about total overhead equal total overhead equal total overhead equal, think about here total value total overhead equal here 3.5 million. 3.5 million, this is a total overhead. It is included. Now think about fixed cost of the company amount in 60,000 for total overheads. Of total overhead, 60,000 is a fixed cost. It means balance part equal variable cost. Therefore, this one can be divided by two parts, fixed cost and variable cost. Therefore, think about variable cost. Variable overheads. Variable overheads equal 3.5 million into 40% and 60% fixed cost. Fixed overhead. Fixed overhead equal 3.5 million total overhead into 60%. Think about value. And balance part variable overheads. Therefore, variable overhead equal 3.5 million into 40%. It has given when activity level 50,000. Therefore, take the answer variable overheads 3.5 million into 40% equal 1.4 million and 3.5 million into 60% equal 2.1 million. This is fixed overheads and variable overheads. Total overhead equal 3.5 million and overhead, those are relevant for 50,000 quantity. Right now, think about requirements. What is the total cost per units? Total cost mean production cost as well as non-production cost. Therefore, total cost per unit. This is the prime cost and this is the overhead total, production as well as non-production. Therefore, you can calculate overhead cost per unit. Overhead cost per unit can be calculated. Calculate overheads. Overhead cost per unit. Overhead cost per unit equal total overhead cost equal 3.5 million. Total overhead cost equal 3.5 million. That one divide by total overhead cost equal 3.5 million. It is relevant for 50,000 quantity. Therefore, divide by 50,000. This is the overhead cost per unit. $3.5 million divided by 50,000. Therefore, overhead cost per unit equal 70. Prime cost plus overhead equal total cost. They don't ask total production cost. They ask total cost. Therefore, total cost available production cost as well as non-production cost. Therefore, this one plus this one. Prime cost per unit is given and overhead is given. Prime cost plus overhead cost per unit equal cost per unit. Therefore, cost per unit equal this one plus this one equal 90. But this is a prime cost and this is overhead cost total value and quantity is given 50,000. Therefore, this is the overhead cost per unit plus prime cost equal cost per unit, total cost per unit and variable cost per unit. Prime cost variable and variable overhead also given. Therefore, you can calculate variable overhead cost per unit. Variable overhead cost per unit. Variable overhead, it has given total variable overhead equal 1.4 million. It is equal for 50,000 quantity. Therefore, this one divided by 50,000. Therefore, this is a variable cost per unit. Variable overhead per unit. Therefore, answer is 1.4 million divided by 50,000. Therefore, 28. This is a variable overhead per units. There's variable cost per units. Therefore, prime cost variable, total prime cost variable. Now think about this one. This is the prime cost. It is a variable. And this is a variable overheads. Variable overhead equal 28. Therefore, think about variable cost per units. Therefore, variable cost per unit equal 20 plus 28 equal 48. Think how to calculate. Prime cost variable as well as variable overhead, it is relevant for 50,000 quantity. Therefore, this is a variable overhead cost per unit. Prime cost all are variable. Therefore, this is the answer. There's total cost per units. Total cost per unit there's as well as there's variable cost per unit. Variable cost per unit there's. Therefore, 90 and 48. Therefore, question number 3 answer 5. Question number 3 answer 5. Next one, fourth one. This is last paper. MCQ 2019 paper, this one. Read carefully. Relevant for CVP analysis. It has given following information related to 3 hours seminar organized for competitive examination. Following information relevant for 2 hour seminar organized for competitive examination. It has given hotel charges per hour 3 hours available. Lecture fees per hour. There are 3 hours. Those are not vary with number of students. And advertisement expense not given per hour. Total value is given. But given lecture material expenses per participants. Per participants. Therefore, you have to compare with participants. When participants change, total cost change, those are the variable. But think about seminar fees per participant. This is a selling price. Lecture material expenses per participant. This is a variable cost. Variable cost per participants. And seminar fees per participant, that is a value should be considered as a selling price. Per participants, this is a variable cost per unit. And those are the fixed cost. But there are 3 hours seminar program. It has given per hour. First one, try to calculate total fixed cost. Those are not vary with number of participants. Therefore, fixed cost. But it has vary with number of hours. අපි බලන්නේ සල්ලි එන තැනත් එක්ක change වෙනවද කියලා විතරයි. Right, therefore, first one calculate total fixed cost. Before answer the question, you have to calculate total fixed cost, variable cost per units, and selling price per units. Think about hotel charges, 10,000 per hour, but seminar, it has given 3 hours seminar. Therefore, it has given 10,000 per hour into 3. Therefore, 30,000. We are going to calculate total fixed cost. We are going to calculate total fixed cost. total fixed cost we are going to calculate. Next one, lecture fees per hour. Those are not vary with number of participants, but there are 3 hours. It has given seminar conducted 3 hours, but given lecture fees per hour equal 15,000 into 3. Therefore, here will be equal 45,000. And advertisement expense not given per hour. Total value is given. It has also not vary with number of participants. Fixed cost. Therefore, this is the total fixed cost. Therefore, total fixed cost equal. Here total amounts 100,000. And this is a variable cost. And this is the selling price. Right now, think about requirements. There's contribution per participants. Contribution per unit equal selling price minus variable cost. Right answers. There's contribution per participants. It means contribution per units equal selling price minus variable cost. Think about sometime it has not given selling price and variable cost. Changes in profit divided by change in quantity, or total contribution divided by quantity. Contribution per unit can be calculated. Here there's contribution per participants. Therefore, selling price minus variable cost. As a selling price, we have to consider fee per participants equal 1,500. As a variable cost, we have to consider lecture material expenses per participants. Therefore, contribution per unit equal 1 million. It's 1,000. This is a contribution per units. First one answer. Rupees 1,000. And fixed cost of the seminar. Think about fixed cost of the seminar equal 100,000. Rupees 100,000. And number of participants required to cover the total cost. That's a break-even point quantity. Break-even point quantity equal total fixed cost divided by contribution per units. Therefore, right answer, break-even point quantity. There's quantity equal total fixed cost divided by contribution per unit. Therefore, total fixed cost, it has calculated already. Total fixed cost equal 100,000 and contribution per unit equal 1,000. Therefore, they ask break-even point, number of participants required to cover the total cost. Therefore, this one divided by this one equal 100 participants. To cover the total cost, 100 participants. Therefore, break-even point quantity equal 100. Therefore, here 100 participants. This is the 2019 MCQ paper. Cost, volume and profit analysis. Right, ප්‍රශ්න තියෙනවා අහන්න බලන්න. MCQ also I will discuss. MCQ papers. And I will discuss from next month cost, volume, sorry, overhead lesson. Also 20 marks available. And management account part I will complete next month. As well as MCQ, partnership, all the papers, all the lesson I will discuss again. Reconciliation, band reconciliation, error correction, manufacturing accounts, manufacturing and partnerships, manufacturing and company, non-profit organization, as well as error correction, profit rectification, and cash flow statement. Cash flow statement, all the lesson I will discuss. Try to participate. Right. ප්‍රශ්න තියෙනවා නම් අහන්න. එහෙම නැත්නම් අපි ඊළඟ දවසේ හම්බෙමු.